Welcome back to Day 2 of Midnight Summit 2025. Please take a seat. The presentations will start in 10 minutes. Please take your seats and turn your phones to silent. The presentations will start in 5 minutes. Please take your seats and turn your phones to silent. The presentations are about to begin. Please welcome to the stage your host, Ian Horn.
The governance aspects are what will allow Midnight to become a fully decentralized solution, because that's another part of the trilemma, is how do you have full privacy with full decentralization out there in the public, but still be able to lock down what you need to lock down. So looking at some of these in detail, we have a unique economic model. And I should have started off, I want to talk to the builders today. I'm the CTO, I like building things. I want to inspire you today with some of the really unique things about Midnight that will allow you to go off and create really innovative solutions. One of those is just the economic model itself, night and dust. The night token is really great. It's our native token. It's got a fixed supply, which we are giving away. It's a scavenger mine has 4 days left. Go get some if you want. And it has the ability to generate the secondary resource, which is dust. Non-transferable, but it is the thing that powers your applications. What this allows you to do is enable all sorts of ecosystems. You don't have to hold night to be able to transact on Midnight. You don't even have to know that Midnight is there to be able to model your public and private state. That dual state ledger that Midnight has, we allow you to interact with that very effectively. Create these circuits, the private circuits. Those are the things you want to put in as zero knowledge proofs onto the blockchain itself. But you can also model your public circuits. In other words, what I want the world to know. What do I need to disclose? And what this all gives you is provable computation on chain without revealing the underlying data beneath it. It's an immensely powerful programming language. And those of you at the hackathon today are, I'm sure, having fun with this. What does this give you? So back to the point I want to make today. This is, if you take one point out of it today, you can build on Midnight things that you could not build before. Yeah. My last role at IBM, I was the chief architect for industry and regulatory compliance in the IBM systems division. That's a long. That means I know a lot about all these things on here. I mean, there's just so many things on here that dApp developers have to worry about. Privacy is the #1 thing that people have to worry about these days. It is not only a regulatory responsibility, it is a moral responsibility. So in Europe, or even outside of Europe, if you violate GDPR, you can be charged millions and millions of dollars for disclosing somebody's information. Wouldn't it be nice if you could say, I've got this, I've got it locked down, I'm starting from privacy, I don't have to worry about this, Midnight has my back. Right to be forgotten, part of GDPR. How do you do that? Well, you don't write it on the chain in the first place. That was one of the biggest problems is, how does blockchain deal with the right to be forgotten?
And this is live. Find me on the show floor as I'm mingling later today, and I'll show you on my phone. But the really cool thing about this is that that swap, I paid the Midnight transaction fees in ADA. So we've been working really closely with the Midnight team and with Shielded to build this. We've been contributing to the core node itself, and we've been working on something that Charles loves to talk about, the capacity exchange. So find me on the show floor to learn more about that, and I'll show you a live demo on my phone.
Thanks, Pi. And with that, my time is up. The timer here tells me I'm done for the day. Find me out there. Let's talk about what you can build, what was impossible. Let's make it possible with Midnight. Thank you all.
Thank you. Great way to start the day there. A real kind of practical insight on what you can build on Midnight in the year to come. So a few notes I've taken down. I generally go through these days taking down notes from sessions so I can share with them at the end, or share with you at the end. The first thing I took from this is we're at a crisis point for privacy. That's a really alarming message, but also quite an important one. And beyond that, it's not too late, though, to reverse the privacy erosion that's happened from the internet. I think that's something to keep in mind as we move throughout the day. The exciting thing from what I've heard there is that you can now build things that you couldn't build before. And that, there was a small ripple of applause when that was said, and I think that's worth picking up on, because certainly there is hope. This technology that we're working with at the moment gives us hope for the future and better privacy standards moving forward. So, as was said, it's maybe time to join the privacy-first revolution and to think about that question of what would you build if users had real privacy to begin with. So we now move on to the next session. We have a panel debate coming up called The Hidden Edge. This is about why privacy will define the next wave of blockchain capital, so an investment slant this time. For this panel, we have Dan Singelman, CIO of Hoskinson Family Office. We have James Newman, Managing Partner and Fund Manager at Republic. We also have Tommy Doyle, Head of Relationship Management at Zappo Bank. And our moderator is award-winning financial journalist and former editor of The Banker, Joy McKnight. Everyone, please, a big welcome to the stage for our first panel.
So good morning, everyone. It's very great to see so many people out on first thing in the morning. Obviously, this panel is really talking about why privacy will define the next wave of capital and blockchain. I'm Joy McKnight, a freelance and financial journalist and former editor of The Banker, which is part of the Financial Times Group. And I'll introduce my distinguished panelists. Today, we're going to explore why capital is increasingly flowing towards privacy-preserving infrastructure. So to my left, I have Dan Singelman, Chief Investment Officer at the Hoskinson Family Office and Treasury Investment Manager at Input Output, a blockchain infrastructure research engineering company. Next to him is James Newman, Head of Relationship Management, Managing Partner and Fund Manager at Republic, a global investment platform for community finance. And then last but not least, Tommy Doyle, Head of Relationship Management at Zappo Bank, a crypto-friendly private bank headquartered in Gibraltar. Blockchain was designed to be radically transparent and to enable trustless verification. However, this transparency also renders it impractical for many real-world applications, as no business or bank will put sensitive financial data on a public blockchain. As stablecoins process over $27 trillion in annual volume and institutions prepare to move treasury operations on-chain, privacy is no longer a luxury feature. Instead, it's now table stakes for any system that wants to handle real money at scale. And just last week, Seismic, a Web3 security startup, raised $10 million to enhance privacy solutions for layer 1 blockchains. So I think this can be seen as part of a shift towards privacy-focused blockchain solutions. So I'm going to pose my first question to Dan, which is, let's sort of take a step back and think about the barriers. So what are the barriers that prevent large institutional capital, such as from a large pension fund, to come into the blockchain space?
Yeah, thank you. There's a lot of barriers that exist. One of those right now, I'm going to say, is these lights. I've been on these panels quite a few times, and these are some bright lights today. I cannot see anybody out there, so I'll break the ice that way. So I used to manage billions and billions of dollars for institutional clients. We had central banks, private wealth funds, sovereign wealth funds, retail, and we would, onboarding them was the first step, but they would also kind of go through an RFP type process. And a lot of the times they were trying to find out is how do they maintain confidentiality and privacy. And this is just in your regular old TradFi type world where you're replying to RFP type questions and the money kind of comes in. What we need to do, if we really want to open up blockchain, is we have to allow privacy and confidentiality for these types of clients. The principal reason why they would come over to the blockchain world is because there's different types of return streams that they can get in blockchain space that they cannot get in your traditional finance space. Anybody can go get T-bills or corporate bonds or Apple stock or Amazon stock. That's fine, and we've solved that. But if we want to bring this on-chain and bring that large capital base from these institutional investors, we need to give them the same kind of suite of protection and privacy that they experience in their traditional portfolio. So we need to bring things like Midnight with privacy, confidentiality, the 4th generation of blockchain technology that allows them to hold these kind of trade secrets. You want to send $100 on chain? Sure, no one really cares. You want to send 100 billion on chain? You need privacy, you need confidentiality. You don't want to give up your trade secrets for these types of things. I managed multi-billion-dollar portfolio for the United Nations, and one day they called us at 9 a.m., it was a Friday, and they said, we're going to send you $2 billion more. The only people that knew about this transaction was me, my back office, and the custodian to confirm that transaction. A $2 billion wire hit the SWIFT network, then hit the custodial account, and then I started acting. We need to do the same type of things in blockchain space. Because what they actually did that day is they sent $6 billion out. Because there was 3 clients that were managing the same type of portfolio for them. And I didn't know this until later. But if you were to do this on-chain now, publicly disclosed, and I know, oh, that's the UN's account, and they send $6 billion out publicly, and I see it goes to 3 different parties or 2 different parties, you're giving up informational advantage, and markets move. This is what we need to protect against. So blockchain technology, bringing them into the space, bringing those institutional clients in, we need to give them the same kind of protections and comfort that they experience in their traditional portfolios as they would in the blockchain space.
I think it's a great point. And if you look at Twitter, for instance, last night with BlackRock and all the Twitter comments on the Coinbase move in both in Bitcoin and Ethereum, one of the hurdles, outside of regulation is clearly privacy, because, the best thing of blockchain being it's so transparent and it's trustless, etc. But you can't move that amount of notional without then all of these ripples and go and judge for yourself. Are they selling? Are they rebalancing their existing portfolio? And then you just get speculation, which is unhelpful for everyone. I think one further point outside of just the notionals around the trading aspect, which is obviously a huge, huge point. Just also think of the trust in providers, right? And I think this is where Midnight have excelled in terms of and sort of distanced themselves from other peers. I worked at Citigroup at one stage, not too far away from here, actually, in Canary Wharf. And it may be outdated, it was a couple of years ago, but Citi was the most hacked institution in the world. And that was because they do the payroll for the US Army and the US government, right? Now, if you look at blockchain, and that in Citi's specific case, I worked in the markets division, but they're paying US representatives, I think in 70 plus countries on a monthly basis. Perfect for stablecoin, perfect for blockchain, right? Remove the corresponding banks even below the Citi network, make it easier for US government officials and army officials to be paid globally. There's an easy case there. The reality is, who are they going to trust with that sensitive information that could effectively bring down a sovereign state such as the US? And so that's really, the pipeline of where we go from here is really interesting. I think we'll get there, but it's not an overnight.
Just to add to that quickly, it's not just about trust and privacy, it's about understanding and education. A lot of institutions really need to understand how the institutional grade infrastructure that is being built will actually integrate into their existing systems. And on top of that, if you think about privacy, it needs to be thought of privacy as a feature. And I think privacy in the digital asset world has often been seen as secrecy, and secrecy is seen as something nefarious. And with a lot of the privacy-focused tokens that have been out there from the last cycle, which have obviously been dragged into the limelight recently, I think it's quite interesting that we need to move away from secrecy and towards privacy and what benefits this can bring. And that will get the institutions comfortable with actually using a number of the primitives that we want them to use.
Yeah, it's the disclosure side of things. Again, if you and I are transacting on-chain, maybe I have an option position, the strike is at something, and Tommy sees that I'm posting margin. He doesn't see the amount. We could wrap it in some type of a ZK tech, right? And we don't know the size or even the directionality, but every day at 4 o'clock, as soon as the market closed, the margin clerk comes by and he says, oh, you got to post more margin against this position because it went against you. Now you see that this is taking place. Sometimes a little packet goes up and sometimes it comes down. Back to me, it's still disclosing some information, and then you start trading against me, and then I get into a defensive type position. So it's more than just how do we bring big sums of money on, right? That's we need to protect that, right? But it's also about protecting the small little market structure bits. And having, companies have trade secrets for a reason, right? Coca-Cola's not going to tell Pepsi-Cola, hey, we're sending lots of money back from Thailand to Atlanta, Georgia. They're trying to, you have to maintain that level of corporate privacy because there's, profit margins to be protected.
And on that privacy aspect, I think that obviously everyone in this room is pretty educated towards ZKP, this type of encryption technologies. When speaking to friends, family, parents, I think it's really interesting to use analogies. And I always go back to the one regarding going to a nightclub or a pub where I get out my driving license and give it to them. In that moment, I'm disclosing a significant amount of private information. They know my name, they know my date of birth. They don't need to know my date of birth. They need to know the age verification part of it, that's it. And they know your address. That is a security concern on a personal level. They know where I am and where I am not. And that is the same thing that translates towards the traditional finance world, the trading world, in these things. And these things will, if they are visible, will be exploited.
James, there's no way you go to a club.
All right, well, you've brought up a lot of really interesting points, and I think we'll get to come back on quite a few of them, actually. But Tommy, I was going to pose the next question to you, which is really around, okay, we've talked about big institutional capital, et cetera, but then how important is privacy for your clients, like the high net worth, the family offices, et cetera, and, is this a major concern?
It's a huge component, actually, and we can kind of run through, if you think of Example Bank as being the original Bitcoin bank, we've evolved into a bank for retail. We're in 90 plus countries, but also a lot of that retail have made substantial gains in Bitcoin. They've been with us since 2013, so they have family offices or special purpose vehicles. I will tell you an almost amusing anecdote of we onboarded a very large family office, probably a top 20 family office globally. I won't say the jurisdiction. And they wanted to go and see our bunker. We run an MPC custodial model with a nuclear bunker hidden in the Genevan Swiss Alps. And the problem was, almost looking at it from their lens, they wanted to send the son of the family of the UBO and then some security. And by definition of seeing a secret bunker, there's a protocol to follow. So you have to put your phone in a bag that shows you can't, reassess the geolocation where you've been. This was a problem for said family because they had kidnapping risk on individual, and it came down to, well, look, I'd love you to on board, I'd love to open an account, but you can't go and see a secret bunker and know where it is. It just defeats the purpose. And so we had to be quite blunt. So they went, and so secrecy, definitely. I think if you break down the privacy, to Dan and James's point, almost see it as two functions: the effective capital markets section, and then the trust section. And this latter one was, okay, the security and the trust. And we are still new entities, right? And so we've onboarded a large Singaporean family office, and they said, hey, DBS are active in crypto, why should I bank with you? And I said, look, to be fair, you should come back in 10, 12 years after DBS have been live and ask me, why should you bank with DBS, right, for crypto? Because crypto is a different asset class with different risks. Conversely, I wouldn't try and sell them traditional finance and compete with DBS. But on the effective capital markets, if we just pigeonhole that, again, to James's point of secrecy, privacy almost being seen as secrecy and against the aim of the blockchain. The blockchain is, by definition, trying to engage, empower people of all backgrounds, and blockchain doesn't care where you come from and where you're based, right? But to do that effectively, it needs an effective capital market, and there's certain rules that we've relied on, and disclosure rules in equity and credit capital markets that have actually allowed those to function. And so, I worked in equity capital markets. You could buy, may have changed a little bit now, but like just under 10% of a Spanish equity without disclosing to anybody, right? And so is that secretive? Is it privative? This is listed equity. Everyone in the world can access the IBEX. But the reality is, to allow people to build up derivative positions and structured trades, they need a framework. And the UK, it's slightly patched. The UK is slightly lower. Germany, it's just under 7%. And so those rules are in place to allow, to Dan's point, large notions of capital entering a market within a framework where they're not going to be seen. Because I think that is, from a capital lens, a real concern if you're trying to move, $400, $500 million worth of a crypto asset.
Well, it's interesting as well when you talk about a bank, because when a blockchain is great, anywhere someone has an eraser and can kind of change the rules to their favor. Charles was talking about this yesterday. That's where blockchain technology is really good, right? Because it's decentralized and no one will have that kind of authoritative power. When you bring this on-chain, and then you bring privacy confidentiality, you can have new companies that start to exist, like a bank, a full on-chain private bank, like with a current account or a checking account. This is what you can start to have. And this is what's really exciting about this technology, is you're going to have all these new types of companies that are going to be created because of this privacy component that you're adding. In Midnight, I know we have a company in our testnet right now that wants to do private payroll. This gentleman has 20 employees, and right now he's paying them in USDC, and they get to see everything on-chain. So he has 20 people that he pays from a public wallet. And let's say I'm employee number 7, and I go and I look at my wallet, and I say, oh, okay, let me just see where I got that from. And I look, and there's 19 other payments that went out. And I put those into a distribution, and I see, because I'm employee number 7, that I'm on the left side of that distribution. I don't know exactly who my peers are within that distribution, but I know I'm underpaid relative to my peers. And I go and I complain. So what we need, and what this company wants, is a regulatory compliant way to do regular business. Like, we had these great, amazing, functions and features from like the 60s, the 70s, even to today, and now we're trying to shoehorn blockchain into this, but we kind of forgot about privacy and confidentiality, that real businesses, real society functions off of people having the ability to choose, do I want this private or public? And I think that's where we're trying to get to with the next generation of this tech.
Excellent. All right, well, let's talk about where the investments are flowing now. And so, James, I was going to ask you, sort of, what specific technologies are attracting the most investment, and why would you say that? Why do you think they are?
There's really a few verticals that are attracting investment, and areas in particular that we're focusing on. Firstly, ZK proofs, that vertical of technology, whether it be integrations, new L2s, roll-ups. I think that's paramount for this space, and it's clearly getting a lot of traction. It's been around a while, but we're really seeing a kind of critical mass formatting around this. I think the second side of things is around payments, payment stablecoins, and doing so in a private way. To Dan's point, in the payroll example, it's absolutely paramount. It's necessary, it's needed, and there is a demand for it. And if the likes of Bridge and others that have been acquired recently are really going to proliferate, there is the necessity for this equivalency of what is private in traditional banking rails. Lastly, it kind of alludes to a number of points made, but it's about identity. And it's if we're going to have a certain system or a whole upgrade of the institutional infrastructure being moved on chain, then you need to have that ability to identify yourself, be able to disclose certain parts of information in a compliant KYC, AML, and also regulatory compliant manner. On the traditional finance side, it's absolutely paramount for trading. On the day-to-day, you want to be able to disclose information that is relevant towards the process, the transaction that is taking place, but not too much information. And I think these are huge white spaces in which there's a significantly large TAM to invest in, and these are the areas that I quite like.
Dan, did you want to come in on this?
Yeah, so this is what's coming, right? Midnight or other blockchains. Well, I'm going to use Midnight. Midnight is building the roads, the foundation, the structure to which the cars will be driving on, right? And so what we need is builders. There's a hackathon that's going on now. I need the builders to build the cars, and the people will go inside the cars. On most blockchains, they're doing the same type of a principle. And those cars have clear and transparent windows. And you can see everything that's going on inside the car. But with Midnight, it'll have blackout windows or different types of gradation in the tint. With that selective disclosure, you can see some things that are going on inside the car, inside the company, but not others. This is where we need to get to, is allow different companies to be built, different features to be built that allows for different choices of privacy, public or privacy.
Excellent. Tommy?
It's a sensitive subject. I've had 3 cars stolen in London, actually, so I can't on Uber. But no, I completely agree. Look, from our lens, payments is huge, right? We were the first bank to that's Bitcoin focused to adopt both Visa and MasterCard globally. I think if you look at the layer below the banks, the corresponding banks is ripe for disruption. We've seen Coinbase look at BVNK and a few other deals. I think that'll continue to be a hot sector. For us, going back to Dan's point, I think, and James too, that institutional adoption, we'll see that typically in a family office and ultra high net worth, and to some degree sovereigns as well that are coming through. It's that reliance on the current ecosystem and framework is too visible, it's too transparent for those sovereign states. I mean, we had a sovereign that have subscribed to our BTC fund. Delighted, but I can't tell anyone about it, So it's kind of, it is what it is. But I think that was a separate case of it's a regulated fund, it's off-chain in terms of the subscription, so it met their hurdle. But if that was all on-chain, they just wouldn't technically be feasible for them to invest right now. So hence the need for someone like Midnight to help.
Yeah.
Excellent. But as there's increased investment in privacy, do you think this is going to attract sort of a heavier regulatory response? James, I was going to ask you first.
Yeah, of course. I think it will. I think that's generally a good thing. I'll make one point before I pass on to others, but it's really about some kind of level of regulatory standardization around privacy. I think regulation has been pretty heavy on that vertical, and I think it's because there's this perception, whether it's true or not, that it facilitates nefarious transactions, behaviors. I don't want to go into a debate of what cash or traditional banking rails has already transacted. Is to be debated, but not here. The point is, it has that perception from numbers in the market. So regulatory clarity around what type of processes, infrastructure, what is secrecy, what is privacy, is absolutely paramount. And with clarity, things become very investable. And that's really where I'm focusing. Clarity means that I can invest in things and not take that, or not have that real left tail risk towards something being non-compliant, which is problematic not just from a kind of investable standpoint, as in losing money, but also from a fund structure. It's problematic to have these in your fund.
I think identity is a tricky one, because when you start aligning that with AI, and then how do I even regulate that on a global basis is a challenge. I think it needs to be addressed, right, in terms of there's a balance between what data am I comfortable putting online versus, and how's that stored, and who polices the policeman, really, which is the biggest threat there. And especially now, some of these firms have just become so big. correspondingly, I would say, if you look back in financial press, about 2-3 years ago, every time Bitcoin was mentioned, and this is me being Bitcoin biased, the carbon footprint was in the same sentence. It was like, Bitcoin miners, here's their carbon footprint. Thanks to NVIDIA and AI, we no longer hear about carbon footprint. It's about how many gigawatts each miner can allow for AI technology. So the world moves on quite quickly, and because that's a focus, I think that'll be sort of elaborated and probably looked at in conjunction with AI, because it's a real issue for people, especially the next generation coming through. I will say, finally, on the Uber on the way here, the Uber driver asked him if he was in crypto just to kill some time, and he had a 15-year-old son, so I don't know if he's accessing crypto legally or illegally or through his father, but he said his top pick was midnight, which I thought was quite ironic, given that I ended up here.
Fantastic. Did you want to?
We need regulators, because we need the rules. Just tell us the rules, and we'll know how to play the game. We have GDPR, we have the travel rule, there's other rules and regulations that are out there, but we need this. And the unique thing about the tech and the blockchain space is it's programmable, because the regulators in Costa Rica might have different rules and regulations than the ones in Japan. And at the foundational level, like as I was explaining, that tech needs to be adaptable and moldable to all those different regimes, all those different countries. It's not up for us, blockchain space, to say these are the rules that we want to play by. Argentina has different rules than Canada versus Kenya, and that's what we have to be adaptable to and moldable to, because there's just different societal differences all around the world, and the code can be adaptive to that and still then be moldable and applied to benefit those companies and regulators and consumers.
But do you think there will be a harmonization of regulation around this? It's very hard if every regulator is taking a different approach. It's very difficult to...
There's foundational sides, right? We need to know who the person might be, different types of elements, where do they come from, wealth, age, race, sex, these types of things. Just like a casino might need to have that information, or just like when James was explaining, with his, ID, you don't need to know everything. But that's the interesting thing is, yes, there are certain core fundamental things that like all regulators around the world would need to see, and it's, up to us as citizens, private citizens, to disclose how much of that information we want to give up and participate in that network or that application.
Excellent. All right, we only have a few minutes left, which is a bit of a shame because it's been such an interesting discussion. But maybe my last question, and it's to all the panelists, but I'll start with Dan, which is what more needs to be done to increase that institutional adoption and get institutions prepared to move treasury operations on-chain? And maybe my other question, we can do two at once, which is that, in a room full of developers, what should be builders, developers, what would you sort of, call out to them to take action around, or what they should be doing?
I need you to build me this application, because Fahmi and I have been on the road talking about this for many, many months and quarters. Build this and you're going to make a lot of money. Here it is. Tokenization is not about tokenized T-bills. That is like a complete waste of talent, and tokenized stock. Who cares? We already have that sorted out. You want to put that into your Robinhood account or your trading account? It's fine, it's easy. You want to put it on blockchain? Ring-a-ding-ding. What tokenization is really going to do is it's going to open up corporate balance sheets. Right now, if I wanted to get exposure to Coca-Cola, there's one way to do it, and that's with the stock ticker KO. And when I go and I buy that and I put it into my account, I get the return, the dividend, the price return, whatever else from these guys. But I don't want to have exposure to all of the Coca-Cola products. I only want exposure to the best product, Diet Coke. I think you guys call it Coca-Cola Light over here. So what Coca-Cola is going to be able to do with blockchain technology, privacy, confidentiality, is they're going to be able to open up that balance sheet, and they're going to be able to tokenize a certain vertical. In the mortgage world, we call this a mortgage pass-through. And what they're going to be able to do, maybe it's a 3-year type term, is they're going to tokenize the return stream of Diet Coke. I will get exposure to all of the revenue and all of the costs, and at the bottom line will be the net income or positive free cash flow. That should trade at a higher multiple relative to Coca-Cola broadly. Nobody likes Sprite. We all want Diet Coke or Coca-Cola, or what do you guys call it, Coca-Cola Max or something, sugar-free, whatever it's called. I don't know what you call it over here. But that's what's going to happen. And it's not just with Coca-Cola. You're going to see other companies. They're going to start to monetize their balance sheets. Before, they would split off an entire vertical of their company and sell it off. Now, they can just take a slice of it and expose this. And this is what's going to bring in those institutional investors, because that is a different type of return stream than they can get just getting Coca-Cola. So now I'm going to start building and constructing a portfolio of Diet Coke, and I want the Ford Mustang exposure, and I want the Pringles exposure. That's what we're going to start to see with tokenization. That's what this technology is going to do. So if you're a builder out there, please, you're going to be a billionaire within a year if you can build that tech.
James, can you add to that?
Not sure how to follow that.
Yeah.
Just told you the secret sauce. I would say from the builder question, I think privacy can be incorporated at different levels or different layers into things that is being developed. And I would urge you to incorporate it at a kind of more foundational base layer level. I think it's paramount. I think it's easier than patching things on later down the line. Regarding what institutions need, I think we touched on some of it, but regulatory clarity, there's a significant education piece. I think the understanding that the infrastructure stack is going to change, but that takes time, and that not everything is going to move on-chain. Not everything is going to stay off-chain. There will be hybrids as things develop towards a more on-chain model. And with that, I think the understanding of the things and pieces that are needed, privacy clearly being one of them.
Excellent. Tommy,
yeah,
we have 30 seconds.
Perfect. That's more than enough. I guess from my lens, we get pitched products quite a lot at the bank. I would just take a solutions-led approach, right? And so what problem am I trying to provide a solution for? And in reality, that's only two things. You're either cutting costs or increasing distribution, right? And so you're either having more customers or lower costs, right? That's what makes something more profitable by definition. You know, I think a lot of people get lost on a problem that's not yet there or maybe there, but there's plenty of problems to Dan and James's point that we can provide solutions to right here, right now, where you can do very well.
Excellent. All right. Well, fantastic. I think we're right on time. Thank you so much to the panelists, Dan, James, and Tommy. Thank you very much. Thank you.
Thank you. Another great panel there. A few takeaways from me. I mean, firstly, I'm actually just relieved that Tommy got an Uber here rather than leaving his car in London again. That's my main takeaway. Secondly, also, I'm still not sure if James does actually go clubbing or not, but I figure that's best left unanswered. Some serious takeaways from the session, however, is that investors need privacy, especially when sending huge sums of money. I think that's a really key point. Public disclosure obviously erodes informational advantages, and there are good reasons to maintain secrecy when moving large amounts of money. Privacy has been seen as secrecy, of course, which is also sometimes seen as nefarious. So perhaps with that in mind, we need to reframe the way that we talk about these things, because what's actually going on is very much what's been going on in finance for years and years and years. There's no reason that people should think that moving money in a kind of rationally disclosed way is in any way kind of underhand or wrong. There's obviously other exciting things going on, like new on-chain companies and banks can be created. That's an exciting opportunity. Another thing I'll point out is that tokenization will open up corporate balance sheets, as we heard at the end there. All very exciting stuff. And the call to action to everyone here, of course, is that we need builders. We now have the platform. It's time to go out and build. And that's what the Midnight Summit is, of course, all about. So on to our next panel debate. This one is titled Trust, Verify, Transact, Private Finance on Public Chains. This is about the idea that finance needs privacy and regulators need auditability, and of course they do. So this panel brings together infrastructure providers, liquidity venues, secondary markets, and tokenization. It's going to show how privacy by design can coexist with compliance. So we have, for this panel, Chanchal Samada, head of EMEA at Blockdaemon. We have Sanjeev Barari, co-founder and CBO at Zonix. We also have Alexander McFarlane, founder of Keyring. Keyring, and this one will be moderated by Tim Copeland, Head of Growth at The Block. Everyone, please, a big welcome to the stage for our next panel.
Hello and welcome to this panel on private finance on public chains. My name is Tim Copeland. I'm Head of Growth at The Block, the crypto media site. We have a stacked panel today, so I'm going to give each panelist 30 seconds to introduce yourselves.
Hey, I'm Danny Bailey from Blockdaemon. We are the leading infrastructure provider within this space, bringing Web 2 into Web 3 since 2017 and have launched over 250,000 nodes within this space and run an MPC technology that Tier 1 banks use.
Hi, my name is Sanjeev. I'm the co-founder of Zonex. We are a Silicon Valley-based company in real-world asset tokenization. We build a platform for institutions to come on chain. And we actually built something unique. It's a compliance embedded on a token level. And the jurisdictions, it's actually regulations embedded on the governance of the token as well. So yeah, this is our 8th year in this space, and proud to be with Midnight to programmable privacy to actually put it on RWA's real-world asset tokenization.
Hi, I'm the founder of Keyring Network. We do zero-knowledge permissioning. Think log in with Google, but we can get any information from any website and prove it to another website.
All right, so first question. How can we design permissionless systems that still preserve meaningful financial privacy?
So my experience dealing with institutions over the years, especially with the banks, in US, it's more to do with the Genius Act when it's just getting passed. And I believe the financial institutions require more programmable privacy and the regulations and compliance. And that's the first thing for them to actually be on chain. And the more, what I see is the adoption would actually go more with, the private chains. But now, since we have a programmable privacy on embedded, and the regulation and compliance is embedded on a token level, actually that's more of the preference for financial institutions to adopt, digital assets ecosystem.
Yeah, I think if you look at institutions, having come from one of the world's largest Tier 1 banks, they're not going to want everything to be available to everyone in terms of the information, how they're transacting, who they're transacting with. It doesn't mean to say that you're trying to hide any of that. What you're actually trying to do is allow the right people to know the right information to allow that transaction to go through in a correct, auditable, and compliance way. I always think about, if you look at most organizations, they'll have SOC certifications, they'll have ISO certifications. You don't necessarily go through that process with every individual. And if you look at something that Midnight's trying to achieve here, is the ability to prove something without showing all of the information to everyone. So the fact that you may have a certification that allows you to work in a certain manner, that's almost what we're trying to do in a very different way in a financial system to prove that we can transact, we should transact, but with the right information for the right people.
I think it's what's really interesting is when you look at how this has developed in the last sort of 20 years with privacy and PII and data sharing. I think what's shifted is kind of the rational element of what is rational to share. In the past, it wasn't rational to send your passport to a random startup on the internet. It wasn't rational to send your driving license or your proof of address to a random person you didn't know, and let alone rational to do that about 5 times a year, as the previous Director General of MI5 apparently says that he gives his information around the internet to these random startups as well. And I think that's where it's really interesting with the whole idea of rational privacy with Midnight and bringing that back into, okay, well, this actually makes no sense, and doing things like what we're doing with Keyring to use zero knowledge to prove only the things that are relevant instead of just showing everything and pulling your trousers down for effectively everybody in these individual startups.
Okay, and are there any technical components that are still missing to unlock privacy on public chains?
I think we're getting there. If we look again at, I think, Farm, you mentioned it, and it was mentioned earlier this morning, around the evolution of the blockchains, of where we're at the moment, and we're looking at fourth generation in terms of what you decide you want to disclose versus what should be available. I think if we think about the institutional adoption side of it, this is moving faster than what they are. So I think it's more about them starting to understand how they apply this rather than are there missing components. It's about how do they get internal decision makers to come on board with what's appropriate for them and their organization rather than there being missing components. I do think the ability to build on Midnight is giving the optionality of what you want to disclose, why you want to disclose it. If you think about any transaction, whether you're working in a small startup, whether it be an SME enterprise kind of business, all the way up to a bank, you don't want all of your information and your transactions available to your competitors, right? You don't want them to know what is there. And it's not because you're trying to hide it, but that is just the nature of any business. I do think the larger institutions now are starting to get on board with what they can do with blockchain, and I think this fourth generation is something that they're really going to need to catch up on to start leading the way with what they can provide their end customers.
I think interoperability actually makes compliance, interoperability, and accountability for regulators. If you see the institutions are more to get an exposure of all these three to be on chain. But if you see most of these experiences from the asset managers, fund managers, or probably institutions with whom we are talking, they would want to see more interoperability on different chains and regulations and compliance built in it. So I believe that's one of the things which we see has been moving pretty fast on the adoption curve, and I believe that that's going to be the solution.
I think there's huge voids in technology, and I don't think it's in like theoretical technology. I don't think it's like people need to publish more papers on archive. I think it's the adoption of technology within financial institutions. It's the fact that when you look at things like Basel and how long that took to roll out, purely because it was very difficult to write a very long SQL query. That's the difficulty that financial institutions have, is tying all of the different trading books together and figuring out how they're going to move that onto a blockchain. It's a vastly complicated infrastructure query. It's going to cost them hundreds of millions of dollars on each entity. And so I think one of the key unlocks there is, from a technology perspective, is consultants that can figure out how to migrate SQL databases. You know, that's the basic thing.
Yeah. And how do we ensure that privacy tools are built in a way that's fully compliant?
I think one of the things with compliance is we look at it as effectively like a shadow ledger. So when you have one of the biggest breakthroughs in blockchain was that you centralized the ledger between two counterparties, therefore you didn't need to tie out at the end of day. Compliance, you still need to tie out pre and post transaction between two entities. And so what no one has really managed to crack at the moment with the compliance side is the centralization of a shared ledger for compliance. And that's why we still struggle to get the unlock of kind of the DeFi Lego, as it were, in traditional finance, moving into the blockchain. One way in which people can potentially do that, the Circle guys came up with a really interesting idea, which I think is going to be messed up by compute costs and gas chain costs of gas on chain. Which is the idea of clawbacks on ERC20s. But you can do that in TradFi, but it would be wildly complicated to execute.
I think one of the things we built is something which is based on the jurisdiction of an asset class. The rule sets for issuing securities are embedded on a token level. So the governance is already embedded on the token level and the compliance as well. So just to give you a little bit of a brief about when your securitization works, when you tokenize real-world assets on blockchain, you have to actually compile with the regulations and based on the jurisdiction where you're issuing the asset class, where the assets on the chain. So we actually embed on those compliance and the token level. which actually kind of gives more flexibility for the institutions to issue assets on blockchain.
Okay, and how close are we to enabling trading, private trading of real-world assets on chain?
Yeah, I mean, sorry, so the KYC, KYB, KYT, or AML, it's already compiled on the on the token level, so asset level. Think about it like that. So once you actually tokenize the assets, and the token holder is actually the investor is going to be buying those tokens, the KYC, KYB, KYT is already kind of compiled on the token level. So that actually increases more of the regulators' belief that the KYC or KYB has already been done. I think that's something which we've been seeing a lot of progress on that front in terms of the investors buying those digital assets token class.
I would say one of the most difficult bits in there, to just jump in on that, is when you do tokenize RWA, what's the point of it? So you get the transferability, which is one thing, but I think what a lot of people want to do is DeFi-style operations, collateralization being one of the main things. That's where liquidations, that's the most difficult bit of the compliance component.
Yeah, I mean, sorry, I just want to add one point thing. See, the biggest issue in RWA since beginning, because we've been seeing this space since 2017, is the regulation, compliance, and liquidity. There are no distribution rails for RWAs. I mean, you can issue as many as tokens, but those tokens are only sitting on the chain. Who is actually buying them on a buy side? That's one of the reasons that we see that we've actually introduced something called as a connector, which connects the multiple buy-side networks. Like family offices, pension funds, endowment funds, sovereign funds could actually now invest in those digital assets through the regulated rails.
Yeah, and I think the other element where we struggle a little is the interoperability as well. When you're talking RWAs, where they're issued, how they're issued, and the ability, when you say about liquidity, where does that actually sit if you want to go across multiple chains? And I do think that there is problems to be solved there, but it is moving forward.
Yeah, on that, actually, there was a big issue with, this is one of the big issues we've seen recently, is like Pendle, for example. So on some of the Ethereum chains, there are these kind of swap platforms. And what we've seen is that people will take their RWAs and they will kind of like, the fixed income universe is starting to grow a little bit. They'll use Pendle, et cetera, et cetera. There's no liquidity on the other chains. So people start bridging them over to the other chains. How are you supposed to liquidate those things in DeFi? And then suddenly you get everyone saying, oh, yeah, this is fine because you can bridge it. But fundamentally, there's bridge risk, there's time delays. And then you end up with all of these problems get like, massively propagated. And then when you have an issue like the other day with some of these funds blowing up, suddenly everyone realizes the time delays actually matter, the liquidations don't happen, and suddenly everybody gets held with nothing, tokens worth nothing.
Okay, and how can we build systems where regulators can verify the activity without having full visibility?
Regulators are always going to have as much visibility as they need as they build out within this space. I think we're learning as we go. Regulation isn't always 100% there day one. MiCA has brought in some great frameworks. The US is bringing in their framework, although we're yet to see exactly what that's going to be. I do think, again, it comes down to the element of everything is auditable, but what do you need to disclose? For example, if you look at an equity trade right now under MiFID II, there are certain disclosures you have to do within a certain time frame. It doesn't mean to say that you're making every single element of that transaction available to everyone. And again, this is where it comes down to that selective disclosure. Sort of things that you can do on Midnight will allow them to disclose the right information to the regulators. Whether they'll get that right day one in terms of exactly what they need, that will grow, and that will allow the banks and the institutions to build out more products.
I think the regulators doesn't require the entire visibility, I believe, right? I mean, based on the use cases, like if you're using, we are working on, issuing municipal bonds for one of the state county in US, and we've seen the regulations for the regulator is actually required only for the purposes of, who is actually buying them. and what's the source of that income. And that's something which you can actually build something now with Midnight feature where we can actually have that programmable, kind of, selected disclosures to be, given to the regulators. I think that's something which could probably speed up the entire, regulators' adoptions as well.
Okay, and what's the biggest risk that institutions see in private finance on public chains?
Tornado cash. That's it. They're just worried about that. They're worried about reputational risk. You have dark pools all the time. The fundamental risk is that you get pinged by regulators saying that DPRK has suddenly washed a load of funds through your entity and you didn't know about it, and then you're done for. That's basically what they're worried about.
Yeah, I think it's on the risk side. It takes a lot at a large bank to go into a new asset class, a volatile asset class, as we're seeing right now as well. It doesn't just take one or two people. It takes a lot of different divisions within a bank to put forward the ability to move into it. And so when you talk about the reputational risk, it's not just of the whole organization. It is going to be the sponsors internally. It's going to be the person in risk that signed it off, the person in compliance that signed it off. And then if something does go wrong, who's the one who's accountable for it? So I think the biggest risk is the ability to move forward in a way that they see compliant internally and get it signed off.
Well, this is the thing, Danny, like, why would you bother as an individual? Why would you put your career on the line when you're making enough money in fixed income and equities and FX? Like, what's the point? So you've got to have like a damn good reason to put your reputation on the line and sign that off. You've either got to be a massive evangelist. I can't even say that word, but whatever, you know what I mean? You've got to be really keen on the tech just for tech's sake. But when it comes down to it, your kids' school fees are not going to get paid if you cock this up. And so why would anybody put that on the line, you know?
I think they both have covered almost everything. So.
Okay. And what's the hardest part of making privacy work inside a regulated environment?
I have no idea what you just said.
You do what?
What's the hardest part of making privacy work inside of a regulated environment?
Well, I think, again, if you look at any institution, as soon as you start to say that you want to use privacy, it looks like you're trying to hide something. That's not necessarily the case, what we're saying here. What we're saying here is, what do you need to disclose? What do you want to disclose? So I think that the word in itself, in terms of trying to create privacy within regulated environments, is the problem. But that's not what you're actually trying to do. What you're trying to do is provide the right information to the right people that you want to disclose to.
From regulators' perspective, privacy is not a secrecy. Actually, it's much more of a transparency in terms of accountability is concerned from the regulator's perspective is concerned. So I believe the more such kind of programmable privacy we could actually demonstrate to the regulators, I think that would kind of give them more comfort.
I think the regulators are a representation of their member body. And if you look at, all you have to do is scroll through the FT comment section and you realize what the member body's view of privacy is. It's like, why do you want to do privacy? Because you must be doing something illegal. That's basically what all the comment section on the FT says every day. And until that changes, it's going to be difficult.
Sure. And how do we prevent privacy from creating fragmentation across different chains and ecosystems?
Well, I think, as Midnight have already said, they are looking to bring in the chains into it. So I don't think it's going to create fragmentation. In my opinion, it's allowing you to use someone like Midnight with however you're trying to transact.
We work with almost most of the chains, from EVM to non-EVM. And our experience, we are extremely excited about Midnight because of the, of course, the programmable privacy. But then we, now since we've actually positioning this together in front of the institutions, I think that would actually get us, really big, demand from institutions to just be jumping on, this whole privacy feature.
I don't think they'll get fragmentation so much. I think it's every time a new chain comes up, or side chain or anything, it very much depends on the sponsors and the relationships that chain has. And I think what Midnight has done a really good job of is reaching out to a lot of different sponsors. You see Zcash, you see Near, you see all of these other big teams that are all involved in the Midnight vision. And I think that's why they'll probably not suffer the issues that other chains have had with liquidity and fragmentation.
Okay, and what guardrails need to be put in place to ensure that everything is sort of kept, people are protected, investors are protected within private systems on blockchains.
Can you define what you mean by protected? Protected against what specifically? Like fraud or criminal activity?
It could be all sorts of different.
So from the investor's perspective, in terms of investing in those assets which they are putting it on chain?
Maybe making sure that you're not accidentally trading with people in sanctioned countries or...
Yeah.
I think that's what we've talked about, right? That's the pre and post trade approvals, and I think that's not given the tech exists, like MPC TLS, ZK-TLS helps you do these kind of things like really quickly, and so long as you have the ability to just flash someone in terms of like check their existing exchange account or check their existing bank account, you can do that in seconds. That's not a bad UX, and people won't be bothered, I think.
So when you so just to give you an example about when we offer real-world asset tokenization as a service. So think about it that all the regulations for that particular jurisdictions and those rule sets are already defined on a smart contract. So if somebody is buying from the U.S. securities, which is issued under Reg S, is an exemption of SEC. So you cannot buy something from those countries which are banned or are not kind of qualified enough to actually buy those. So you can set all of these in those smart contracts. That's what we call it as a jurisdiction set of regulations.
Okay, and at what point is private trading of RWAs and others, tokenized equities and things, at what point will this become truly mainstream? Is it going to be next year, 5 years? Like, what's the time frame?
I think it's happening now. I think you look at the. I think the big driver of this is going to be collateralization in DeFi. It's the fixed income universe. It's the thirst for yield. When you look at institutions, and I don't like the word institutions at all, actually, or TradFi, what I like to think about is real money and hedge funds. At the moment in crypto, we largely only have hedge funds, and both sides of the trade, which causes a big problem in terms of like when people are looking at TVL, because they're getting from one hedge fund and selling to another hedge fund. It's very predatory. Whereas what people are looking at moving into is offering fixed income products, and it's the fixed income products that require some kind of like yield generating asset underneath. And you don't get many yield generating assets in crypto other than staking, and therefore there's a need for things like credit and, well, basically credit is the main one, right? Coming on chain. I think we're a world away from like pension funds and kind of fixed term liabilities, but I think it's credit which is kind of the growing thing in this year and next.
I think money market funds, private credits are getting really good traction from the RWS perspective on chain. And yeah, we've been seeing since 2018 there was people were talking about RWS, but now it's going to really happening because I see the Genius Act, it's going to get passed. Most of the financial institutions, like think about it like a Bank of America relationship manager would come to you and say, I can actually open your digital wallet because they want to keep their stable coins. So that would increase more adoption from the retail end. And once you have a wallet, you can buy digital assets, any digital assets, what you want. And that's going to be, and that's one of the reasons that we see that the time is now.
And I also think the efficiencies that blockchain brings to the banking system, again, having worked in large banks and seeing the number of reconciliation break issues, billions and billions of dollars that just are unreconciled on a daily basis, and bringing in blockchain and an RWA that's tokenized solves a lot of that for them. So I think it's the efficiency that drives it. The retail will definitely be driving it as well.
Yeah, middle office end of day checks are a nightmare. So that's like, I 100% agree.
Yeah.
Okay, and then quickly, what big unlocks are we going to see next year? Like, what changes can we anticipate?
What chain?
What changes can we anticipate for sort of private trading on?
I think fixed income. Fixed income is going mental on chain already. You've got the if you look at the history of like how TradFi evolved, I think at the moment we're probably in about the 1970s where Eurodollar market has just started exploding. You can see that with dollars and stable coins. The next thing that happened in the TradFi market was then you started with swap markets starting to evolve. And the first thing that actually happened in TradFi was treasury stripping. And that's what happens. This is why I brought Pendle up before, because it's so relevant in terms of the timeline of TradFi. The first thing that happened in TradFi was treasury stripping, and then the next thing, the swap market, and then after the swap market, you had a growth of fixed income for the next like 10, 20 years, and it became the biggest asset class. So I think that's what's going to happen over the next 2 years. I think that's going to be huge.
I see private equity, money market funds, or something which is definitely going to more come on chain.
And for me, it would be the banks starting to do real custody of crypto assets. I think that unlock has been demanded for quite some time, especially in the US now with the tier 1 banks. They're moving forward, the regulations come in, and it will bring more activity and knowledge base into this area.
Amazing, awesome. Well, thank you for all of your insights. If we can get a round of applause for the panelists.
Thank you.
Thanks so much.
Thank you again. Another great panel there, and lots of takeaway points, which I've scribbled away in my terrible handwriting. Also, welcome again to everyone joining us on the live stream from CoinDesk, and also thank you again to everyone who's in the room. So a few points. We need solutions. We need more building, more code, perhaps, rather than more writing, although we obviously do still need that. Interoperability in private finance is a big challenge. It's very difficult. Sanjeev raised a good point, which is when you tokenize real-world assets, what exactly are you trying to do? It's the questions that follow from this that makes compliance somewhat tricky. I find it interesting, again, that reputational risk has come up, obviously a big concern for banks. I think Alex framed that really well when he pointed out the idea of somebody risking their career and their livelihood on making the decision to bring blockchain assets into a major bank. I can see why that would be tricky in many circumstances. I also thought Danny made a good point on privacy. We've heard this throughout the last 2 days, that when we talk about privacy, it often looks like you're trying to hide something, and that can look really bad. And I think that's something we as a community are going to have to tackle. We're going to have to reframe this whole conversation. Also, I love the point around ecosystem offering defense against liquidity concerns and fragmentation. As we can see, Midnight has built a huge community here. And also looking to areas for the future, fixed income, PE, money market funds, and banks offering real custody of crypto assets. All really fascinating stuff. So we move on to our next panel. This is one that I'm very excited about. I've spoken to all the speakers beforehand. This one is called Healing the Trust Gap. It's about privacy, proof, and the future of health data. Now, modern healthcare, of course, runs on data, but the systems that manage it are arguably quite broken, and we're going to tackle that right here. This is also a topic of our hackathon, so perhaps over the next few days, we'll see some solutions emerge to help deal with this challenge. Now, where could data ownership and consent and transparency be more crucial than healthcare? Let's see. I'd like a big welcome for this panel. It features some people that I know very well. We have Jem Ozan, founder and CEO of Nexifuse, Anthony Abed, CEO of Sovo, and this one's moderated by Dr. David Cox, a journalist at many outlets. He's written for pretty much anyone you've heard of, including The Telegraph, the BBC, The Guardian, and more. Everyone, please, a big welcome to the stage for our next panel.
Well, thank you, Ian. So welcome everyone to this fascinating session, Healing the Trust Gap, Privacy, Proof, and the Future of Health Data. So I'm a health journalist. I write for The Telegraph, the BBC, and other national newspapers. And medical data has been a big focus for me in the last 10 years. I've written numerous stories about the whole key issue of data privacy, security. What do we do about that? And that's taught me two things, really. I would say number one is that our data is not as private as we think it is. I've seen some scary studies which have shown just how easy it is to de-identify someone with just a handful of variables. And also, secondly, this space is ripe for disruption. And to discuss this, I've got two brilliant panelists with me. We have Jem, who is the founder of Nexifuse Health, and Tony Abed, who is CEO of Sovo. So yeah, guys, to kick off this discussion, I suppose, first of all, what would you say are the biggest weaknesses at the moment in our healthcare systems? Jem, I know you've told me some terrifying things about the number of breaches in the US every week.
I think the breaches are definitely a cause for concern. We don't want our most sensitive medical data exposed. But I think some of the weaknesses, and the most obvious one, is the fragmentation of that data and the lack of continuity of care as a patient. Whether you have to switch from provider to provider or from country to country, the fact that your medical data doesn't follow you in a way that you feel safe, secure, in a way that makes the data interoperable, I think that's the biggest weakness at the moment.
Tony, what would you say?
Thanks, Jem. Yeah, I do agree with you. That's the largest weakness. And then to build on that, when you take it from a public health perspective lens, one of the biggest weaknesses that you have is the consistency of how data is captured and represented to be utilized to drive regulatory decisions and things that can help the general public and the general populations to get over health crises and health situations, and to be a bit more proactive in how we treat some of our health issues that come up.
That's interesting. I mean, yeah, fragmentation is like a huge issue, like so kind of like here, like so kind of in the UK. Like you move like some GP and your data doesn't move with you. And, you know, I guess, would you say that's kind of becoming an even more of a pressing issue now because, you know, people are using more and more different platforms to store data?
For sure. I think, you know, whether you're doing genetic or biomarker testing, lab results for various things, we are becoming more and more conscious about our health data. And we're seeing this with wearables as well, whether it's Garmin, Fitbit, or Aura. We are becoming more focused on improving our own biological markers. And with that comes this even more inherent fragmentation of data. We have many, many apps on our phones. We use multiple providers. And now that longevity is becoming more of a global point of focus, people are even traveling between countries to receive various, perhaps experimental treatments. And that data needs to be consolidated in a way that we can have full ownership of our most sensitive and personal information.
Definitely, definitely. I mean, and Tony, would you say as well, obviously, you know, given our data is being stored on so many different platforms, you know, security obviously is kind of an issue, and is there that need to try and add additional security to all these electronic records which we're creating?
Oh, absolutely. I mean, just from a personal perspective, I have multiple wearables that I wear. Like, so I've got the Ultrahuman ring. I wear an Apple Watch for the most part, and when you look at what's captured on each of the devices, even though the data is fragmented and it's separated, they do feed each other. There are the back-end APIs that connect the system. So this is just at that very base personal level that gives multiple layers of super sensitive data in real time to different entities. And even though I'm willing to disclose that information to these entities, you don't know whether they're going to be hacked. Like, the bad actors are going to go after these entities because you have the most vulnerable sets of data. And when you think of everyone goes to your longevity platform, your different things, but think of the mental health data that is being stored and being put into LLM models like ChatGPT. So people are putting the most personal layers of data and sensitive information that makes them more vulnerable to issues in the job place, issues in society, issues with their family and friends. And they're just releasing that data without thinking of the long-term consequences. So the security layer becomes more and more prominent and prevalent and the need for it starts to grow as we see a rapid increase in the adoption of these LLM technologies.
That's a very good point, and actually OpenAI even recently came out and publicly said please do not put your medical data in our system, because we can't guarantee that it will be protected long term. And I guess that is an issue. And Jem, I know you've kind of had first-hand sort of experience in your family of the consequences of a medical data breach.
The consequences are very large. I think especially 2 weeks ago, OpenAI came out and said we don't want to provide any guidance on finance, legal, and health matters. And I think this has come about through a number of unfortunate cases, as Tony mentioned, in mental health, where the LLM is just not capable of providing that objective and very personal guidance to that person to bring them out of that situation. And I think that's what health guidance should be about. It's our most innate vulnerability, the things that we need help with. In the case of a recent implication, Change Healthcare, a very big insurance processor in the United States, had a very, very large breach in the millions and dozens of millions. And the only remediation for this is just the credit check. Because when that data gets breached, your medical profile, your personal information, your social security number in the US, and your address, it's all available. And that is all you need to steal someone's identity.
Yeah, I mean, that is frankly terrifying, like, so really when you think about the consequences of that. I mean, and perhaps then, you know, that's a good opportunity to maybe like sort of move on to like sort of how like sort of blockchain technology can perhaps, you know, solve like sort of some of these problems. I mean, I know that's obviously one of the big goals of like sort of the Midnight Foundation and obviously both of you guys as well. So, you know, just give us an idea of how can some of these new tools like zero-knowledge cryptography help like sort of tackle some of these challenges?
So this is exactly what I'm currently dedicating all of my effort to. You know, I think there's been a lot of publications from academia that have proposed blockchains as the perfect infrastructure for medical records. However, a public blockchain with queryable data that's accessible to everyone is not the best place to store confidential or private information. When Midnight came around in its earliest of days, it became very obvious to me that this is the direction, if at all, healthcare and blockchain would progress in. We need that data to be selectively disclosed, which is exactly what we're building with Nexifuse. Your data becomes fully encrypted, secured, and at your leisure and convenience to disclose as you please in a selective way for the care that you're receiving at that point in time, exactly.
And Tony, like, sort of, you know, talk me through also as well how some of these new tools can solve that fragmentation, like, sort of issue, you know, of having like sort of different bits of data stored in different places, and you really just need to amalgamate it together, you know, to see like what health trajectory you're on.
Yeah, absolutely. So in a previous life, I was consulting for the Canadian Public Health Agency and then the Canadian Blood Services. And in the Canadian healthcare system, the data is stored at a provincial level. So there are fragmented data sets with different standards, different requirements at each province that oftentimes don't speak to each other. So this is just in one country's simple example where Ontario's data structure and data requirements are different to Quebec's data structures and requirements. So when you put the EHR systems or a patient who's living at the border, like I did, I lived at the border of Ontario and Quebec. When I went over to Quebec for work, I could not get the continuity of other. And when you have those minute centralized storage systems of data, you can't get that system. But when you look at the decentralized storage that have programmable prototypes that you can put together, you have the ability to put each of the parameters that you need, adjust that for the legal requirements, your regulatory requirements, the clinical needs. You can then have them speak to each other in a secure and confident private manner. So the healthcare use case is what got me into blockchain 5-6 years ago. And what was missing for me was the layers of privacy within that. So when Midnight was coming out and when they were announcing what they were building, it got me re-excited about the applications that blockchain can bring in the healthcare space.
Definitely. And I think one interesting layer of this discussion is, you know, this panel is like so called like sort of, you know, healing the trust gap. And trust is like sort of a huge issue, like so kind of in this space. I mean, it's come up time and time again when I've reported on it. For example, I remember a couple of years ago, the NHS like struck like big partnership with Palantir, and that was the whole idea behind that was to try and tackle this fragmentation, but people didn't trust it. That was the big thing which sort of came out almost immediately, you know. So how do you think, what can we do to sort of like build public trust in these tools?
I think ultimately everyone that we have engaged, and we're currently active in 3 different countries, has highlighted the need for interoperability. They all want this, both within their own structure, but also, as Tony mentioned, in a national way that feels porous between provinces or jurisdictions or cities. And ultimately, you know, unlike Palantir or Oracle, I don't want Nexifuse to be permanently ingrained as a service provider to these institutions. Obviously, we offer services to them, but one of the benefits of using Midnight is that it's a decentralized protocol, and we're not asking them to put their trust in us. We're asking them to put their trust in this verifiably secure protocol that a lot of industry professionals have staked their reputations on. And that is the promise of blockchain. The decentralized ledger is a way to shift away from a centralized entity controlling data, finance, or whatever is the pertinent component of that system.
Would you agree, Tony?
Yeah, absolutely. I fully agree with what Jem was saying. And then when you think of it from a technological implementation, so the proof is always in the pudding. So it's always on your ability to execute and to demonstrate that what you're building deserves the level of trust that you say and that you're asking for from society. So you build that over time, which is why in Charles's keynote yesterday when he was talking about the length of time that it takes to build systems, and we're building an extremely complex infrastructure that has privacy built in. It's not an afterthought. It's not something that's plugged in after the fact and shoehorned into the system. It's built in from day one. So for an institutional adoption, and healthcare is the most sensitive data that you can get, requires the level of confidence that someone who's going to implement it would have in a fully trustable system. So I think this is the ultimate use case for a privacy-backed protocol.
And do you think, like, so the fact that the decentralized nature of blockchain, obviously that sort of adds an additional layer of transparency, which people don't necessarily get at the moment with those centralized health systems. Their data is stored in one place and they don't exactly know how it's being used. Do you think that's maybe one of the opportunities here for blockchain?
I think very much so. We're seeing some very large industry players. I won't name any names, but they are indeed holding that data hostage. And the healthcare system is already a pretty difficult system in innovating technologies for. Doctors are not prone to innovations because they're operating at a very high pace in a very high stakes environment. So we're not seeing a lot of uptake in new technology, at least not easily. At the same time, we're seeing the most tangible uptake in AI applications in the medical sector. So ultimately, we need to build robust frameworks that are verifiably secure, especially if we're going to be sharing our most sensitive data with AI. And I think that will help us transition away from some of these data kidnappers, or let's say data miners, in a way that is fully decentralized. As much as we use Midnight and a decentralized protocol like Midnight, our core system architecture is also decentralized, and we have absolutely zero access to the underlying medical data.
Tony?
Yeah, absolutely. I think the decentralized nature and the privacy layer feed into your last question around trust. I think that's what builds the level of trust, which helps the level of adoption and implementation of these new types of technologies. And if you think about the last 10, 20 years of the internet and how we've moved forward, nothing online that you're using for free is truly free. You're paying for it with your data, and you have zero say over how that data is used, where it's used, who's using it. Right now, with this type of technology, you have that ability to selectively disclose where that data is. And from a healthcare adoption, not just from the user side of things, because I think users see that right off the bat, but large institutions, research agencies, pharmaceutical agencies, all of the different layers of users of this healthcare data can see that right off the bat, because it de-risks them in it right up front. Like, it de-risks them right up front before they actually start using that data to have that trusted, secure layer that they can utilize.
That's a good point. That's a good point. I mean, and Jem, you mentioned, the challenges in getting healthcare to invest in something new, and Tony, you mentioned kind of ChatGPT earlier as well, and I guess LMMs, we're starting to see people talking about incorporating them into the healthcare system, and obviously that poses all kinds of privacy challenges. I mean, I wondered whether that perhaps could be the push, the kick, which is needed to sort of push people into investing more in blockchain.
I believe so. I think interoperability is a big issue, and interoperability requires, in a way, a global infrastructure. Otherwise, the data that you pull is a very transactional. In the case of, let's say, a hospital utilizing OpenAI or any other LLM protocol, the most recent interoperability standards do not have selective disclosure built into them, which means that if I were to have the best standard for medical data, which would give me all of this information that I then feed into an LLM, that is not a secure protocol in any way.
Yeah.
And what we're trying to figure out at Nexifuse is what is the minimum barrier for institutions, providers, and patients to have a framework that they can trust, that makes them feel empowered. And I think that's blockchain.
Yeah.
That's exactly what blockchain is trying to do, empower people in a non-centralized way.
Yeah, yeah, yeah. Tony, have you found the same?
Yeah, absolutely. So from our venture studio's perspective, we look for projects, we look for entities that can truly integrate and plug into existing systems. So instead of trying to rewrite the entire industry, rewrite how things are done, you find elements like that, right, almost like a middleware type of product that you can integrate with that very thin layer of effort to utilize it and to see the results right off the bat. You want to drive that hype, you want to drive the true demonstration of value right through it. And I think this allows that plug into existing systems that will actually drive true change and true adoption.
Interesting, interesting. I mean, and, you know, where are you seeing lots of the early adopters, you know, so far, lots of in the world? And, you know, what do you think it would take to kind of see, you know, for example, say the NHS, lots of embrace blockchain?
That would be definitely a monumental decision for the United Kingdom. I think ultimately we're seeing this in every country that we have tried to target so far. We did expect some reluctance, obviously, because it's a brand new technology, but you know, ranging from California all the way to the Middle East, everyone seems quite keen on this type of innovation. This type of innovation that, one, provides security, two, a trustless system that everyone can tap into, and we believe that Midnight will provide that as it continues to build. But furthermore, with Midnight's zero-knowledge capabilities, the things we can do with medical data are really exciting. Over the coming years, we will work very closely with the Midnight team to really fully utilize the infrastructure that they have built. We believe that there will be a time in the near future where I, as a patient who has medical data, can perhaps even commercialize my medical data. Currently, we're seeing that data mining, anything you provide your data to, is most likely going to be sold, even if not today, later, when that company is acquired by someone else. And in this way, if I can provide a zero-knowledge attestation of certain medical information that I'm willing to disclose to a pharmaceutical research company or a government or anyone else, we could track when that data is being used in an immutable way, but perhaps I can also be compensated through the blockchain for the data that's being used.
That's a fascinating example, kind of a sort of re-empowering the patient, like sort of in some ways. I mean, are you able to sort of give us any sort of early examples of where, you know, where that might first take place?
Yes, currently we're working on clinical research applications.
Okay.
We know that research institutions want to collaborate. However, everyone is very sensitive about where that data is located. With Nexifuse's architecture, we're able to give them that security and comfort that satisfies their IRBs, their internal review boards, and to give them this ability to collaborate and commercialize. And what that means that, you know, if you're part of a network of, let's say, children's hospitals across the United States, and you're not very keen on sharing the data that you have accumulated over time, we can create this decentralized, trustless mechanism using zero-knowledge attestations and other methodologies to have these institutions benefit from that data without compromising the underlying concerns.
Interesting. And Tony, I know you're working in Barbados, lots of, you know, a lot at the moment. Is that one of the early sort of use cases, you know, lots of you're seeing in their healthcare system?
Yeah, absolutely. I've been in the health tech space for just about 2 decades now, started when I was 10. And it's incredible to see the lack of friction that's being brought to the conversations that we're having about the adoption of different layers of blockchain solutions in the healthcare space. I've seen it through the provision of free-to-use healthcare software in clinics and hospitals throughout Canada. And what we're seeing right now is people have embraced the technology. They've embraced the need for change. And I think it goes back to what we were talking about the trust component to it. It has been a system that's been out there long enough that people are starting to trust it. They're starting to see this is something we're willing to take a risk on. We're willing to make a move towards implementing in small proof of concept ways, as you should, but we're starting to see the conversation moving that way.
Yeah, yeah. Of course, I mean, we're running out of time, but just like sort of a couple of final things which I wanted to sort of touch on with you guys. I mean, I guess first of all, just quickly, you know, what would you say is like sort of, you know, kind of the biggest areas of resistance sort of at the moment, like sort of, and, you know, how that can be overcome perhaps?
Currently, our biggest excitement and hurdle is the launch of Midnight on mainnet. I think once that does happen, we'll be ready to turn on the light for a lot of these institutions that we've been working very closely with. I feel very grateful that we're able to overcome some of the long sales cycles. You know, Barbados is a very innovative hub. They have multiple medical academies, and they have a high output of very intelligent doctors. And everyone seems very excited to implement this. I would like to believe that currently there are no major hurdles in front of us.
Tony, would you agree?
It's an interesting point, and I think it goes back, it's not unique to the healthcare space. I think it goes to the blockchain space, the Web3 space as a whole, is that fear in building and deploying and selling to institutional grade implementers of the technology. So for me, there's still a hurdle around the education on the platform, education on how it can be used, and the level of value that's brought to individuals who can utilize this and see like real-world demonstrable proof. So for me, it's from the builder's perspective, we've been hit down so much, and there's been almost been building in the shadows and in fringe communities for so long that I think it's getting over that fear and building with a layer of confidence to deploy these types of products.
And finally, I guess just 30 seconds for each of you. Where, like, so do you think, like, so this is all heading? What can we expect in, like, so the next 5 years?
I think we're going to see a lot more ownership of our personal information. I would like to see the vision of blockchain fully realized, where self-defendance and self-sovereignty is more present in our daily lives. For me, that's medical data. That's what I will put all of my effort into, and I would love to see that come to fruition.
Tony, where are we going to be in 2029?
Awesome. 2029, eh? So for me, it's seeing systems that provide more proactive utility of healthcare platforms. I don't want to be in a situation where I'm reacting to a healthcare issue for myself or my family or my friends. It's more being able to utilize platforms, utilize the technology that we have available, that we can proactively address these issues before they risks before they become issues.
Fascinating. I mean, well, thank you guys. That has been an illuminating and just really eye-opening, like, so kind of talk.
Thank you so much.
Thank you.
It's been a pleasure. Thank you all.
Thank you. Okay, that's the last session of this morning, but a few points to pick up from there. I mean, firstly, I find it really interesting this is about mental health as well as physical health, you know, and what happens when all that is placed in ChatGPT. What a fascinating idea that is. Also interesting that OpenAI discouraged people from doing that. Moving forward, we can see that zero knowledge can solve data fragmentation. We also, however, have issues with trust, which is paramount in healthcare. It's a recurring theme throughout this event. Decentralization can move health data forward. Data is being held hostage in Web 2 systems. Really fascinating to look at. I also like Tony's point about building for the future and how, as an investor, he's looking at companies that are working and integrating with existing systems rather than trying to create something completely from scratch, which will take too long to kind of implement. As a final point on that one, we're moving towards more ownership of our own data. Wasn't that the promise all along? It's really interesting how rational privacy can be getting us there. Anyway, it's now time for a coffee break. All I ask is that you be back in here for 11:35, and also take your time, enjoy, and I'll see you for the next session in about 15 or 20 minutes.
Privacy in Motion explores how your personal data fuels billion-dollar systems while examining who controls the rules of digital privacy and what it truly means to own and protect your identity.
People like you care a lot, people in crypto care a lot about privacy, but it's sad that the wider internet surfing public doesn't care enough.
They're nihilist or nihilist, right? They don't care.
Do you think people actually care about their digital privacy?
Surface, no.
Oh yeah, absolutely.
I think some people care more than others.
Many people care too much about their privacy.
What do you think about that?
So first of all, ask them to hand over their unlocked phone and see if they really believe what they're saying.
So Brendan Ide, thanks for joining us today. You're the founder of Brave. I don't think it's hyperbole to say you're one of the founders of the web even. You developed Mozilla, JavaScript back in the day. To talk about Brave, I mean, why originally did you want to develop that and why do we need it?
So Brave was a sort of rebellion against all the ads and surveillance that was getting crazy 10 years ago. When we started with Netscape in particular, I joined in April 1995, everybody wanted to put up a web server of their own with a picture of their cat and dog and their grandchildren. That was great. That's still possible, and that's still fundamental to the web. But nobody thought about, what if there's a picture on my site that I load from a different site? That site could track my users. That became the ad tech pixel, which then got reduced to an invisible JavaScript. And that built this entire surveillance economy up behind most people's backs. We didn't know about it. And it was clear that the big browsers were captured by their search engine owners or partners. Even Firefox, when I was there, wouldn't block cookies. We had 3 tries as an open source project by people trying to block third-party cookies the same way Safari did. And they got rejected. And I was party to it, so I'm not blaming anybody else, but we all thought this rocks the boat too much, and it's just going to cause people doing ad tech to run to the fingerprinting side of the ship, and it's not going to improve the situation. So with Brave, we got to start from a smaller user base of lead users and build a new approach that blocks by default, so private by default, and then can we build up new economics and new models for keeping publishers and users happy.
You want to be really protective about your privacy and who can see what you are doing online. Just like while Iris still sharing all this information with so many services, they can be encrypted.
Privacy is a right, so you should be able to block things. Free riding is always allowed on the web if the content isn't paywalled, in my opinion. This is the nature of the web. But what if you want to give back? What if you want to help the publisher you like? What if you want to do something novel with ads? And that's what Brave's been building up. So private by default, and then can we build up new economics and new models for keeping publishers and users happy?
So this is a big question. I mean, does incentivization work to preserve privacy, do you think?
I think it's an open question. I think it's a hard problem. It's not going to be solved in one fast move. For instance, we did the basic attention token on Ethereum, and like Bitcoin, the Ethereum blockchain will fingerprint you. It doesn't have privacy. It has pseudo-anonymity, and enough repeated or patterned transactions will identify you, sometimes uniquely. But we've seen evolution since then with Zcash, Monero, and now things like Midnight. And we've done our own sort of browser-based techniques because we don't want to put things on the blockchain if we don't have to at all. We don't want to put them on our servers. It's better not to have the data. Then you can't be evil, instead of the sophomore "don't be evil" slogan Google used to have until they retired it. So can you build up a trusted edge-based browser operating system data set that allows you to look back, do that kind of analytics that credit card companies do to detect non-fraud from fraud, but do it in the browser and then mint a zero-knowledge proof, a proof that anyone can verify based on the terms of the proof itself.
If you look at the dream of the internet, this kind of, broadly available town square that, is essentially unregulated. I think if you go back to the beginnings of it, I think a lot of it comes down to educating individuals. I think people need to adapt their mentality to this kind of brave new world.
The law is never perfect, and it depends on human action, both in the regulatory domain, because so much needs to be figured out by the regulators after the fact, and among the users, especially the lead users who are informing the next generation of products. I think between regulation, antitrust, and user consciousness, lead user consciousness, privacy is still rising.
If we've learned anything from browsers like Brave, it's that privacy isn't just possible, it's preferable. But to truly reclaim the web, we may need to rethink not just how we browse, but what the internet is even made of. So what happens when we stop patching the system and start rebuilding it from the protocol up?
Privacy in Motion explores how your personal data fuels billion-dollar systems, while examining who controls the rules of digital privacy and what it truly means to own and protect your identity.
Centralized AI effectively will lead to 1984. Big Brother controlling, telling us what to do, what not to do, right? It's actually almost inevitable because of how companies work. Like, you first provide value to the users, and then you move into extractive stage, right?
Either of you use AI?
Yeah, I use it a lot.
What do you use AI for?
Like for everything, actually. Just like if you're visiting now New York, give me some highlights of New York. Also, if I need to write an email that needs to be professional, oh yeah, can you rewrite it?
I personally use it for more informational stuff. Like, I just like doing research, or if something comes to me, I'll ask AI like what it's about, because it's quicker, it's faster than Google.
So my background is in AI, right? I'm the co-author on the Transformer paper, which is T in GPT. And so for me, I mean, we actually started Near as an AI company originally, and we actually felt the need for blockchain ourselves. And that's why we focused on building out a scalable, easy to use blockchain. And so when, ChatGPT moment happened, to me, it was like, okay, well, now there is actually a killer product that people can interact with AI. I mean, we actually talked about this problem even before. I've talked about Google and Facebook using AI all of this time effectively to, drive our attention and, monetize our data and effectively have all these issues. Like, you can, like my talks at 2019, 2020 had all of this. So it just like people didn't feel that to be AI, even though Google has literally been doing AI for 30 years. But with ChatGPT, it was like very direct, like, this is AI. And so it was easier to then talk about these problems applied to this, where like your data is now owned by somebody else. They can train on it. People weren't kind of comprehending this before kind of ChatGPT moment.
In terms of the privacy aspect, that's definitely a concern. You have people say, faces being turned into, GPT-generated imagery, fake content you create for documents, things like that.
Someone was using my face and generating images of me nude.
Right.
And they were posting them on X. I've got no control of that. Someone's releasing these images. And, for people who, some people obviously still getting used to the concept of AI. So some people might even think that they're real, and like that's hugely damaging to someone's reputation.
I keep thinking about the idea of machine learning. And at some points, the machines have learned. And what should we be worried about when the machines start acting instead of just learning?
Well, I mean, they're acting now, so I think and learning will never stop, same as humans, so we never stop learning. I think the important parts are, right now, the framework of ensuring that machines, AIs are operating within boundaries is actually, it's very limited in a sense. I call it the thought police, right? You're trying to tell the model to not think about stuff. Right, it's like, do not do bad things. Do not do this to the user. Like in the prompt, right? It has all these instructions. I think this is actually the somewhat the wrong approach. Instead, what you want to have a way to ensure that nothing wrong can happen. And we have actually a really interesting tool. It's math. So one thing that AI cannot break through, right, is math. Like if you ask a model to formally prove to you, mathematically prove to you some facts, that it cannot go around that, right? And so one of the research areas we're working on is, I want agent to prove to me that it's not going to do anything bad with my data, with my interactions, with my personal information, etc. And so it needs to prove to me that before it actually can get access to it. And so you can have this kind of more formal system to ensure correctness of execution and kind of behavior, even if internally it thinks some weird things, like it doesn't matter, right? Like what it does and what the outcomes it delivers.
Do you ever worry that you're giving AI so much of your information that it really now has a very deep profile of you?
Sometimes I do, but mostly it helps me that he knows me, so that's okay.
It can never replicate exactly what we think because we're human, but I feel like giving AI access to a lot of the information that we have is scary.
I really believe AI will be how we're going to interact with computing going forward. And so, I really think that AI, should be able to know as much as possible about us, to represent us, to help us make decisions, to even make decisions on our behalf. And so you want privacy for that. You don't want all of your life uploaded to somebody else's data center, for them to be able to access it. Near's vision is own your assets, data, and power of choice, right? So assets, easy. This is what crypto been about. Data, right? This is again vision from 2019, is indeed a massive resource that's right now been monetized by the companies, and effectively, they're generating money off it. And the power of choice is that fundamental property, right? That, and I'm saying the provider of the product can manipulate you to do things, right? For whatever reason, because they want to make more money off you, right? We should be fighting against that and actually bring the choice back to the user. I think we need more products and more developers who choose these values and deliver better products.
A user-owned internet sounds liberating, fast, private, and open. But AI may be coming for everyone to extract all of the value it can from our mortal coil. How can we ensure our very selves, both physically and digitally, remain truly ours in an agentic future?
Should we be more worried about the government or more worried about big tech, Google, stealing our data?
If big tech is collecting the honeypots, that's where it's going to happen. And recently, thanks to companies like Palantir, the government is getting better at collaborating with the big tech.
So maybe the distinction between government and big tech is maybe not really there if they're all basically the same thing.
They're getting better at collaborating with each other.
Privacy in Motion explores how your personal data fuels billion-dollar systems, while examining who controls the rules of digital privacy and what it truly means to own and protect your identity.
General public, I don't always think that privacy and security are always top of mind against chance to make tons of money on meme coin. We're seeing a large influx of institutions interested in Bitcoin DeFi, and one of their major concerns, or their two major concerns, are security and privacy.
I'm interested in this concept of privacy around Bitcoin. The cypherpunks really believed in privacy as kind of a core message, a core reason for having Bitcoin. How do you feel that the message now about privacy is getting out there in crypto? Are people caring about this as much as they used to? What do you think?
I think it's definitely less. It's more muted. We're seeing some ideas at early stages around, can we just take Bitcoin, which is now almost becoming like a standard, and apply some sort of privacy solutions on top of Bitcoin? So you need programmability for it, like things like stacks and other L2s, but you can imagine that people move their Bitcoin into an L2 and get better privacy if they want over there. So I think we are seeing some initial ideas like that.
We've seen a lot of investment go into Bitcoin recently. How has that affected how people are thinking about Bitcoin as more than a store of value chain, as an L2?
Most of those investments are going for buying Bitcoin as a store of value, not just the ETFs, but also some of the public companies that are building Bitcoin treasuries. But I think it has a follow-on effect, because what's happening is that once these public companies have Bitcoin on their balance sheet, we are going to look at strategies for earning yield on this Bitcoin, or actively deploying it and figuring out how to maximize shareholder value. And I think that trend is where Bitcoin L2s start playing a role.
What about the payments use case on L2s?
So let's say if I want to route a $10,000 payment, every node on the way needs to have $10,000 of capacity just sitting there idle. So it's not very capital efficient. And for larger payments, like $10 million, you're probably not going to find any routes. Our architecture is very different. So Stacks L2 is more like a blockchain. So when you mint Bitcoin on the L2, it's called SBDC. It is fast, it's cheap, and you can pay any amount. You want to pay $100 million, you can pay $100 million.
Right.
it's fast and cheap, like using Solana. And I think that's the best of both worlds. And I'm very, very excited about that product.
People talk about cryptocurrencies as this like, they could be used by money launderers or drug dealers, but in reality, it's the most transparent public ledger in the world.
I think there's an interesting polarity between the way people present and then kind of the mechanism of the blockchain, because everything is set in stone. You know, you can look up any transaction on the chain and it's there immutably. It's sort of a cypherpunk ideal, I think, to be, you know, untrackable and, you know, unnoticed.
So a lot of the time, you know, like even if you do just like set up an account or a wallet, like there's still a risk, because there's conversations around obviously certain blockchains and projects who aren't completely decentralized, and it's decentralized, you know, so you're still putting yourself at risk in an industry that claims that it's all about putting the rights back into the hands of the people.
How do we get more privacy in the crypto economy, do you think?
We will start seeing a shift towards like on-chain native economy. And I think that automatically leads to better privacy, even on a public chain.
Do you think we can really balance the needs of law enforcement and, you know, stamping out something like North Korean hackers, as was the case with Tenor Cash, and have what we want in terms of privacy? Or are those two things just inevitably kind of in conflict?
I do think they're in conflict, but that's why I'm personally interested in finding some sort of a middle ground. Like the example I gave where there's a pool and there is someone that does KYC, and ideally they don't even store that information, right? Like they do it, they issue some sort of an on-chain credential, and then these people are able to mix their
please welcome back to the stage Ian Horn.
Hello, welcome back. I love the echo you get in here. It's really nice acoustics. So, hi everyone. Great to have you all with us in Greenwich. For everyone joining on the CoinDesk live stream, welcome back. This is the inaugural Midnight Summit, day 2. Day 1, of course, was the Cypher Day, all about building an understanding and excitement around everything that's being built in the Midnight ecosystem and is about to be built. Today is more about looking at the partners who are actually doing that building and looking at the realities of what we can do moving forward. So far, it's been a really exciting day. So we now move on to a panel about one of today's biggest topics, not just today, this year's biggest topics, which is AI. We're going to look at AI and Web3 and how we can democratize smart agents, on-chain tools, and no-code futures. Really, really interesting stuff coming up. I implore that you listen to this one, take notes. It's going to be a really interesting conversation to follow. We have Carlos from Dega AI, Mo from Uda AI, Utkarsh from Webisoft, and Web3 Fast. And this one is moderated by Dr. Ruth Wandhofer. Everyone, please, a big welcome to the stage for our next panel.
Right. Well, given we have 19 minutes, I'll better get on with it. My name is Ruth. I've been fascinated by the blockchain industry for the last 10 plus years. And with me, I have an incredibly interesting panel. And without further ado, I'd like you each to briefly introduce yourselves and tell us a little bit about what you're doing. So starting with Carlos. Thank you.
My side, Carlos René, CEO and founder at Dega, where we're building AI tooling for integration with blockchain systems.
My name is Sohail. I'm Chief Web3 Officer at Oda AI. We're a listed company, and we provide private AI apps and private AI inference to large enterprises and individuals.
Good morning, guys. My name is Utkarsh. I'm the VP of Engineering at Webisoft, and we are one of the largest development firms on Midnight outside of Shielded.
Right. So let's start with the first big question. This is about the convergence of blockchain and AI in the context of Web3. And of course, we heard about blockchain for a long, long time. AI is really now the big hype. But how do these two things connect, and how do they actually manifest in what we call Web3? Where is Web3, and how are you contributing to this convergence and evolution of Web3? Carlos, let's start with you.
So on our side, we see that there's 2 use cases that are fully validated beyond a shadow of a doubt for the application of AI. One of them is the automation of customer support service. It's not really something that has much to do with blockchain, but the second one is productivity boost for code generation in software, right? So systems like Cursor, Lovable, and others that allow you to become 4 times to 10 times faster and more productive as a coder.
So Hale, yeah.
I think the intersection of AI and crypto is really exciting because, I think Gavin Wood said Web3 and crypto stands for less trust, more truth. And so you don't have to blindly trust other humans or strangers, but you can rely on math and code. And AI is sort of the opposite. It's kind of more trust, less truth. So you don't know where your data is going, goes into a black box somewhere. You don't know what they're doing with it. You don't know if the actual models are being used that you expect to use. So it's more of the kind of trust me, bro paradigm. So I think that's what's exciting about the intersection, because you can bring transparency and credible guarantees, cryptographic guarantees to the usage of AI. And I think this also makes us a bit less cynical, because if you have to blindly trust something or someone's word, it's kind of a different thing than if you can verify that it's true.
I find that AI is the next evolution of Web3. And the reason I believe that is because of one simple idea, democratization. That's the fundamental principle behind which Web3 as a whole was started. Bitcoin was created so that you could own your own money. You would have financial independence. Midnight was created so that you would own your own data. You would have your control over your identity. And Web3 and AI was created so that you would be able to own the application layer on the AI itself, because AI is removing the barriers to entry to Web3. So now you and I, or anybody in the audience, can start building on Web3 with very little to no knowledge and achieve the same results as a seasoned developer.
And I think what you're pointing towards is the other big piece here, which is decentralization. We've seen for the last 2 decades too much centralization of our data with very large players. We see this now with AI, because obviously they have our data, so they can run the biggest models in the LLM world. And maybe just a few words on how can we manage to re-decentralize. It's something I wrote a book on 3 years ago. How do we re-decentralize to bring it back to the user and remove the dependencies on very large players? Because that's really the democratization aspect too, right? Anybody who wants to start on that? Yeah.
I would say for that to happen, language models need to improve a little more. So we are a few years away from that happening, that where on-device machine learning is at par with what we have on clouds today. So people could have models that are getting trained on their personal data, on their data, and they own the weights, which is the identity of that model by themselves. And that's going to happen in the next coming 2 to 3 years. That's my prediction for the industry.
Great. Okay. Right. Let's start with Oda. So, Hale. So, you're really looking at decentralization of AI architecture. You have institutional clients. You are in a space where people have to be very compliant with data privacy, but also with KYC, AML, and other pieces. Tell us about what you're doing there and how is that contributing to this fusion of AI and Web3 blockchain?
Yeah, sure. So, yeah, essentially, when I use AI, I want to know that my data stays private and that I'm getting what I'm expecting, right? For example, that I'm using the AI model that I'm expecting to use as well. So, and compliance is a big topic there, which I'll mention in the enterprise context in a sec, but basically that's what we're solving. So we can provide inference and apps that are built on top of it in a private manner, in a private environment, and in a verifiable environment. And we use trusted execution environments for that. I can get into that as well later. But basically, you get guarantees around the service delivery. And this is really important also in a commercial enterprise context when it comes to GDPR compliance and so on. So the big companies that we work with, which are banks in Europe and telco companies, healthcare companies, and so on, they can rely on this data being treated privately in the computation, so in the usage of the LLMs, for example. And I think that is something which we should not make compromises on, also on the end user perspective.
So this really means that there are already tools out there people can ultimately embrace without necessarily going into Web3, right? Because these institutional clients are far away from like really embracing that. But I guess your point is here, it's about the ethical individual side, because when you deal with healthcare data, for example, you want to make sure it doesn't go into the wrong hands and it's shared by the wrong people, right? Okay. Now, Dega AI, Carlos, you are providing agents that allow you to code without being an experienced coder. And really, you give sort of these tools into people's hands to design their digital kind of environments without needing to have all this expertise of coding. Tell us what you're doing with Dega AI and how is that really helping to accelerate the adoption as well?
Yeah, so we started using, the conventional AI tooling ourselves, things like Cursor, Cloud Code, and others. And then what we've been doing is distilling our experience, our own knowledge as programmers and engineers in the blockchain space into a special type of, you could call it a skill, right, that we're giving the AI agents. We've used it to boost our productivity considerably. For example, when building out the Quantum Husky simulation for I/O, we did the equivalent of 2 weeks worth of work in one afternoon, right? That allowed us to meet a very tight deadline for that project. And now what we're doing is, after refining the tooling, we're going to enable everybody to be able to access it. For us, everything has always been about democratization, access, and lowering the barriers to entry, right? So Blockchain has a very steep learning curve, right, to be able to operate, to create, to use. And that is what our AI will enable, not only to be able to use the existing platforms, but to be able to create new software, right, like scripts, bots, agents, and web apps that allow you to interact with all the protocols.
And do you see the adoption accelerating as a consequence of these tools that are easier to use? Particularly, I mean, obviously young generations are now quite natively in that space, but I guess if we all eventually move to Web3, it's almost like how fast are we getting parts of society into this game? Maybe just some examples of...
Yeah, I think that it's not happening just yet, right? But we're ramping up to that wave, if we could call it that, like that. And I think that in the coming 2 to 3 years, it'll onboard millions of other people that would have otherwise not jumped into the blockchain space.
And I think it's interesting for the AI side because I'm also using a code-free AI agent where you basically just give instructions on what the agent should be doing, but it doesn't require me to be a coder, which I admittedly I'm not. I'm lots of other things, but the coding part, I had no time yet. And I think this is very interesting to give reliable tools that are also tested and improve over time, right?
Yes.
Into the hands of the many to actually participate in this economy. Right, let's think about the Web3 side, right, Utkarsh? I mean, you're working on creating smart contracts, dApps, automatically leveraging AI. Give us some examples of how you are playing in the space of converging Web3 and AI, and maybe some super cool stuff that's happening right now.
So some of the really cool things that we have been engineering at Webisoft has been Web3 Fast. It's been one of our premier products this year that is really helping scale up and accelerate the adoption of Web3 and Midnight as a whole. Just to look at an example today, like there's about 100 hackers down there. There's about 7 projects right now that have been built end-to-end by hackers that did not have prior compact experience using Web3 Fast. So Web3 Fast is really enabling anybody with the idea and a motivation to build on Web3, to be able to build and execute on Web3. And we're right now at about 600 users and growing, and we have built about 1,000 compact dApps, and we're growing. So we're really excited for what the future holds for Web3 and AI in general, and we're really bullish on it.
So you're saying I can become a hacker pretty easily with your instruments?
Yes.
And all become hackers. That's an interesting conclusion of a panel, right? Well, obviously we're the good hackers, right? But maybe I have a question for you to follow on. What happens with these decentralized apps in DeFi? What happens if something goes wrong? How do you reverse a transaction, whatever it is, or re-engineer? What happens if something executes in a way that wasn't really what people wanted, or it is flawed in execution? What do you do then?
So I would say AI is really helping reduce the barriers to debugging, is what we call that in programming, and also testing and auditing in general. So these AI agents don't only write their code, they audit them using other models. They also set up test cases to validate behavior. And in case you have undefined behavior, which is what we would call this in a programming terms, you would be able to just take that behavior, give it to your model, and ask, what went wrong here, in a very simple way, the way you would be talking to your engineer. And these models would really break down the problem to a level where anybody with less or more experience can really understand what's going on here and be able to solve it more readily and more efficiently. And I don't think this was ever possible before.
Yeah, and you have a way of making sure that the AI really uses different validation, third parties and data sources, so it is an auditable process. I mean, you're sort of saying it's coding, it's auditing itself, it's doing third-party validation, which almost sounds like centralization, right? But there are ways to make sure that it's designed so it stays impartial and really finds the flaws, right?
Yep, so the way we achieve that at Web3 Fast and Webisoft is we use multiple models. And these multiple models almost work as a team of decentralized engineers. There's an engineer that's planning, there's an engineer that's testing, there's an engineer that's writing the code, there's an engineer that's auditing the code. And these 4 are independent model entities whose objective is just to achieve a particular directive. They're independent of each other's motives, narratives, or understanding of each other's context. So they're very isolated in their execution, and this is how we really decentralize AI execution at Web3 Fast at Webisoft.
So Carlos, do you see parallels to what you're doing as well in terms of how you're using different sources and building an infrastructure that really leverages everything that's out there. Maybe just give us some examples of how you do that.
Yeah, so for us, the key thing that we revealed actually in an event about 2 weeks ago, it's called Blockchain Jungle in Costa Rica. And what we're going to be focusing on is a similar tooling, but more narrowly focused on financial applications and utilities, right? So allowing people to connect between both decentralized and centralized exchanges, bridges, and kind of like a mix between, yes, generating new code, but also tapping into the existing APIs and kind of like be able to create your own automations, right, with it. So an example would be like a portfolio management system, for example, or a trading agent, and that's what we're going to be laser focused on delivering.
So Hale, do you want to briefly give us an example of one of your clients and how you really solved a problem using that convergence of technologies?
Yeah, for sure. So one example would be, for example, that we process medical claims for a large part of the German population with AI. So you can also call that intelligent document processing. And what it did is that it increased efficiency a lot for the company, because before that you had humans do it, and for one invoice or one claim it took 20 minutes for one person to process it. And now with AI it takes 3.5 seconds. And it is more accurate, because this type of work, if you want to talk about general intelligence or something like that, it's not really conducive to that part of our brains. You will make some human error, some spelling error and stuff like that. So people were 73% accurate-ish, and the AI was 92% accurate. So essentially this improves, as a clear value proposition for the enterprise. And the added benefit, of course, is compliance, because the inference is done in a private manner. So we come from both sides. We don't only talk about privacy in a sense, of course that's important as well, but we're also solving problems that companies have concretely on top of that.
So significant increases of efficiency to do something that humans are not very excited to do, let's say, in that sense,
yeah.
right? And being able to audit it and prove it and have the data to sustain it. Okay, let's think about predictions here, given that we're running on 2 minutes 33 in a second. How do you, Utkarsh, see the world in, I guess, 5 years' time in terms of this convergence? Is everybody going to have the AI agent doing stuff for themselves? What happens to people's job is maybe a separate question, but how do you see the next 5 years evolving?
I would say the next 5 years are going to be the most exciting 5 years of the human civilization as a whole. We're going to see growth and progress and prosperity at a rate we have not seen before. There is going to be a transition, so we're going to see some jobs go, but as with the Industrial Revolution, and with every Industrial Revolution that has happened in the history, new jobs will be created to replace the old ones, and society will evolve to manage this model that's coming up. But people are going to be more efficient, people are going to be more knowledgeable, and they're going to have much more capabilities as a person than they do today. Everybody's going to be a developer, people are going to have better medical opinions, people are going to have better law opinions, and they're going to have just a vast amount of knowledge that they did not have access to before, being enabled by AI and this age of innovation we are living in.
Yeah.
So Hale, anything to add to this?
That was beautiful. That was beautiful. I think there's this misleading quote as well, 1% inspiration, 99% perspiration to make progress. But it's actually not correct, because you can automate the perspiration part. And I think that's what technology does. So we can focus more on the inspiration phase. And AI is very good at the perspiration part, so it's a great tool to use. I think Einstein said, my pencil and I are smarter than I. And you can replace the pencil with computer or AI. So I suggest everyone picks up the pencil, so to say, and starts using AI, because it is like a multiplier for productivity.
It might trigger your own inspiration more than what you used to, because you're having more things in front of you to think about further. Yeah. Carlos, last word.
Yeah, on my side, I think that, technology for some reason sometimes gets like a bad rep, like people are very critical of it, and actually it's the most equalizing force ever, right? Like, to give you an example, right? Like, the richest person on planet Earth and the poorest person on planet Earth, their houses might be very different, but their phones are basically the same. And in terms of access to this type of technology, like artificial intelligence, the most powerful person on Earth can maybe have an AI that's a little bit better right? But it's an equalizing force. So emerging markets are going to now be able to compete with USA, Europe, Canada, so get ready.
So exciting times. The convergence is happening. I think we are still a few years away from a real Web3 environment, but everybody here is working on this hard, and I think it will give the democratic access, it'll give the identity protection, data privacy where you need it, but it'll also hope to re-decentralize the world to make sure that there's just more equal access for everybody. So technology will help us. Give a big applause to the panel. Thank you so much.
Another excellent panel. Thank you, guys. So yeah, again, as always, I've taken some notes on that. As Ruth was saying there, convergence of tech is accelerating what we can do. These are truly exciting times. And we can create all sorts of things using AI and blockchain, be they trading agents or even things to process documents. There's like no end to what we can do here. We can build faster, more effective, more interoperable products and protocols with the assistance of AI. And also we can do the things that don't excite people. I think that's the thing, as someone who does a lot of writing myself, one thing that concerns me about AI is that it will automate some of the fun jobs that I've always enjoyed doing, but actually the real opportunity here is to take a lot of the grunt work out of the work that we need to do. So what does the future look like? I thought there were some great points there at the end. Utkarsh saying the most exciting 5 years of human life. That's very optimistic. You don't often get that kind of tech optimism. Let's see if he's right. Also, you know, better medical, better legal opinions, and much more. I thought Sohail's point around automated perspiration was quite interesting, and a very interesting way of putting that. And also, trust being the most equalizing force. I thought Carlos made a really good point there. We now move on to our final panel of the day. We have another session after that, though. This one is called Compliant by Design. We're looking at KYC and AML that protects privacy and proves compliance. Now, what we're looking at here, again, these are the themes we've been tackling all throughout the last 2 days. We're going to look at selective disclosure and rational privacy in KYC and AML compliance. We're going to look at how we can meet obligations, but also preserve fundamental individual rights. For this panel, we've got some very cool people. Some of them I've known for years. The moderator is Erica Stanford, author of Crypto Wars. The panelists are Charles Kerrigan, a partner at law firm CMS, Dr. Saj Khoshru, CLO at Midnight Foundation, and finally, Zornitsa Daskalova, Community Ambassador for Crypto UK. Everyone, please, a big welcome to the stage for our next panel.
Hi, so thank you everyone for joining us. I'm Erica. We're talking about compliant by design, privacy versus KYC. So I thought I'd start with some nice stats and facts about the traditional KYC model as it is now. So KYC now, the market costs about $200 billion a year. According to the UN, the Department of Drugs and Crime, it stops under 1% of global financial crime. And of that, the UN estimates it actually freezes and manages to sort of stop being in the markets, less than 0.2% of total financial crime. But the UN is optimistic. Academic research calculates that the KYC and compliance market, as it is now, stops under 0.2% of global financial crime. And this is for TradFi as well, where about 2 to 5% of all global money is laundered. There's other problems with the traditional KYC compliance model as it is now. North Koreans are able to fly around the world on fake passports and get jobs and be onboarded at financial institutions. That happens quite readily, not just North Koreans. There's a lot of problems with the data that KYC collects. There's been some conversation about that today. The data from the traditional model goes into big honeypots, and 46% of global data breaches are for the data that is collected for KYC and compliance. So some sort of pretty sobering stats there around sort of the traditional model. So looking forward, I wanted to start with Saj and go into, is there anything, Saj, that you think that KYC and the traditional sort of compliance model does now and achieves now that cannot be done by some of the means that have already been discussed here in the last 2 days, such as by zero knowledge?
Thank you, Erica. I find those statistics very interesting because, again, it shows that our current sort of model that is being used by TradFi is sort of the dominant sort of position that crypto is trying to also be part of, is in many ways broken, in that the people who do have a KYC issue know that, and they will navigate that quite successfully, either with fake passports or a topic that we'll touch upon, I think, sort of KYC mules, so getting someone else's KYC and getting through. And that's at the individual level. At the sort of institutional level, and in my law firm days, and I'm sure you experience this as well, when you're trying to KYC and onboard a new client, many companies can have opaque shareholding structures by design. So effectively, anyone who thinks they have a KYC problem already structures around that so that they can quite successfully pass through the filters that the current system creates. I think in crypto we are trying to build products that address the current system and create products that will at least alleviate some of the frictions of this system where, as we heard in some of the talks yesterday, multiple times a year we will have to hand over all of our personal information and documents, highly sensitive documents, to institutions that we have no oversight to how they use it, what their data protection policies are, what other activities they may be able to do with our documents. At least in crypto, with zero knowledge, we can get a token or otherwise to show that, yes, we have passed KYC, and this is the proof that we have, without actually giving them the data to then expose ourselves to the threat of data leakage and violation of our privacy.
Thank you. Charlie, you spend a lot of time, I know because I work with Charlie, talking to regulators and TradFi as well as the crypto world. What are the main barriers and blockers that you see for adoption of something like zero knowledge? And what are the main fears of the TradFi and of regulators to get fully on board with accepting a newer version of compliance checks?
Yeah, and I spend time being a regulator. So I'm just finishing my term on the board of a Middle Eastern Web3 focused regulator. And what was interesting to me about that role was that different regulators come at the similar questions from different perspectives. And I think in crypto we spend time facing the financial regulators who have an interest in information being collected and maintained. So you reference financial crime. The financial regulators care about protocols and projects not facilitating financial crime, not screwing the customer, and not creating systemic risk in a financial system. So that requires information to be collected and retained. There are other regulators, the data regulators, and Europe is a standout for this, have the opposite approach. The GDPR regulation is designed to prevent commercial entities storing and collecting information that is greater than is necessary. To summarize what that regulation is trying to do, is trying to say to commercial parties, you can only keep information about your customers if you've got the minimum amount, if you're keeping the minimum amount of information that you need to provide the service to the customers. If you don't need it anymore, you should delete it. So there are competing priorities at different regulators. I think the short answer to your question about how do you get regulators to understand is you got to tell them. most regulation is principles-based. If we in this room have a better solution for addressing the concerns that regulators have about storing information but minimizing the amount of information that's available and can therefore be hacked, and similar, that the regulators and all policymakers are well aware that we have a gigantic hacking issue that is only just starting to leak into people's everyday experience. So if you've got a solution that's a technical solution, explain it to the regulators. They're open-minded. We had years where financial regulators particularly were not open to decentralized projects and protocols. They assumed that it was people who were trying to hide something from them so they could live outside regulation. We're through that. Most regulators, including the UK financial regulator, now accept that decentralization is a thing. They should engage with it. They should deal with it on its own terms, not try and pretend that it's something which is analogous to TradFi. It can do similar things in a different way. And so telling them, ensuring there's not a communication gap, I think, is the best answer.
Thank you. There's, as Charlie mentioned, there's huge differences around the world, and also crime is by nature international, and it might be that perpetrator is in one country and computer used and servers used, and everything is all in different countries. It's a cross-border issue. Saj, practically speaking, how might you get sort of compliance by design built in so that it works on a cross-border and satisfies or regulators and works with the reality that crime is a very international problem?
Yes, I think the way that through practical reasons this is measured, you often look at the regulator with the biggest stick to cater to. So if you're worried about enforcement action by the US or a multi-million-dollar fine by the SEC or OFAC sanctions, that is the compliance regime that you will look to primarily. And then you will, for example, look at others that have a significant overlap with that, whether it's the UK or the EU. Oftentimes you see the enforcement sort of actions coming out of the EU are fewer, so then you use the US one as your primary one. If there's any sort of anomalies for that in the UK or in the EU, you either ignore or you try to address if you have enough resources. There's also that sort of element of how all of this gets addressed, but it also creates some really odd outcomes. So, for example, there are 3 regions in Ukraine that are part of territorial sanctions because they're controlled by Russia. But because you can't sort of divide the IP address of Ukraine, you effectively then impose territorial sanctions on Ukraine as a whole. So a policy that, at least in theory, should be sort of supporting Ukraine by sanctioning those regions, it adds to another layer of collective punishment. Another way that comes up is that if you are, for example, born in Russia, and you may be living in London or also a UK citizen, but because your place of birth is Russia or Iran or other countries that are on the wrong side of sanction regimes, again, there's another sort of layer of collective punishment there where these things come up in your banking transactions and other transactions. And ironically, you may be fleeing those very countries for political reason or otherwise, but once you are sort of out, you still are the subject of the same sort of compliance regimes that are effectively not adequately designed, and you also get a lot of what I call lazy compliance, whereas a bank may just say, you know what, like, for example, if you're born in Russia, I don't want to do business with you. And the complication is sometimes you see those very same banks are banking, for example, oligarchs or others. So it's like if you have again, back to my first point, if you have enough means, you can quite easily circumvent a lot of the compliance protections that a lot of TradFi institutions have. It actually then catches in its net a lot of people that are probably not the intended targets for these regimes. So this trying to follow the mosaic of compliance regimes is quite difficult, but I think with the advancements of technology, we will be able to have a more granular approach that is probably better fit for purpose.
Thank you. And a big part of the traditional system now is regulators want a neck to wring. They want to know who's accountable and who they can blame for something going wrong. And sort of the system works because with the sort of traditional KYC and compliance setup, you have clear responsibility path, which is arguably less overtly clear when you get on to sort of centralized technology and zero knowledge proofs. How do you get around that, Charlie, from a sort of a legal perspective with implementing sort of compliance by design using zero knowledge proofs? Who's responsible and how do you make that very, very clear to regulators?
Yeah, so you're right that the starting assumption is that there's going to be a person or an organization that needs to be responsible. But what's sitting behind compliance by design or privacy by design is that there can be engineering solutions to this, and you can present those to the regulator, they can be satisfied. As you know, in the team, we're often asked to help projects judge, are we compliant by design? Are we private by design? We can give people a short answer before we start, which is, if it is hard or uneconomic for someone in a team to breach the compliance or privacy rules, then you're compliant by design. It's going to be more trouble than it's worth for people inside the organization not to comply. If you can demonstrate that to regulators, you won half the battle. So there is no incentive on a human being inside an organization to build or work outside the rules that have been set from an engineering perspective. Then you've achieved it. So it starts with a kind of legal regulatory review. This is what the rules are wanting you to do. But it's mainly an engineering problem, that once you've got that engineering and being able to demonstrate to the regulators that, as Saj says, whenever there's a system, people set about gaming it. So can the system be gamed, or is it more trouble than it's worth? That's generally what we're looking at when we're asked that question.
Going back to the wider problem of KYC and compliance, I note that my colleague Charlie traveled here on the tube today with his name badge saying his name on the tube in full display, I'm guessing. There's a bigger problem about KYC, and one that I'd ask you, Saj, can this be fixed? You touched on the idea of your marketplaces. That's a massive issue. There's entire marketplaces of people who are no fault of their own, people who've lost incomes, and largely due to the pandemic and the economic situation, who need money. They need an income. They need to feed their families. And there's also industry offering the money for them to be used. And these are, until now, sort of totally legitimate unknown citizens to bypass KYC. And there's, whole price packages for bypass KYC once or bypass KYC on an ongoing annualized basis. And that's a real world problem. You've also got AI tools that can just bypass KYC. We've all seen the demos where AI can be used to bypass onboarding for the big TradFi companies, the big crypto companies, for fake passports. It's a wider problem. Can that problem be solved, Saj, using these technologies?
Yeah, I tend to think, there's no tech problem that arise that tech can't solve. Same with legal problems. It's like no problems are arisen by lawyers that lawyers can't solve. So it's almost like I think with the advancement of technology and then the use cases that we see, we come to understand that the current system is not without its faults. There are many ways that it can be gamed. It effectively catches a lot of people that it shouldn't, and it doesn't catch a lot of people that it should. I think that things like blockchain technology, where you can have sort of trust in a trustless environment, does help us start to address some of these issues. And I think we're still early in this, in that as the capability increases, the ways that these issues can be addressed, both technologically and legally, there will be more options at our disposal.
I like that point. It's a cultural issue, and I think we talk about this a lot in the team where Erica and I work. We have a little team. We hired all our lawyers out of the crypto firms because they just get it. And trying to explain to people who've got a mental model that doesn't come from crypto or decentralization or open source is difficult. This is, for most people in the room, I think you're too young for this, but in the early days of the internet, something like 1992, there's a very famous cartoon in The New Yorker. There's a dog sitting on a chair in front of a computer, and there's a dog sitting on the floor talking to the other dog. And the dog in front of the computer says, "On the internet, nobody knows you're a dog." Now, that's what we're trying to get back to, because these days, on the internet, everyone would know you're a dog. You're going to get adverts for dog food all day long. So when we're showing to regulators what we're trying to get back to, The New Yorker in 1992 is setting as the target.
We've gone on to dogs. Good. Sash, I mean, touching on the dogs and the people, and you've touched on it, there's about 1 billion people in the world who can't be compliant today because they don't have the documents to pass KYC around the world. So it's a lot of people. Can technology solutions like Midnight solve that problem? If so, how, or how do you envisage that working so that everybody can be onboarded when they want to be?
This is a very interesting topic, and I see it come up when, again, as Charlie was mentioning, when we sort of step out of the dominant paradigm that we are exposed to in places like London and other financial centers, and then are reminded that, oh, the world is a very big place. There is, 1 billion people who are unbanked or unbankable, and that have gravitated towards crypto. I was working with a exchange that was trying to onboard the next billion into crypto. That was their slogan, and they were targeting countries like Indonesia, where some mind-blowing statistic, young population, only 9% own stocks and shares, or part of the formal economy, whereas 23% own crypto. So it's like they've almost leapfrogged that sort of indicator of sort of financial assets into the next rung up, because crypto was more easily accessible. And that's even in more sort of established crypto platforms. We haven't even touched upon DeFi and DEXs, where you're effectively not KYC'd. And that poses a problem, because obviously if you are providing liquidity to a pool, you want to be sure you're not market making opposite a North Korean actor. So there are real considerations there. But I was speaking to people actually at this conference and talking about, well, how do you, they were running a DEX, and it's like, how do you try to address that? And there were very interesting ways that are emerging as the industry matures. So for example, they were providing their DEX was providing a liquidity pool for RWAs. And some of those RWAs are effectively KYC'd because they're property, or they are property owned by a company who has shareholders. And then there's sort of a link that you can see, okay, well, this is all, it has been KYC'd in some part of the journey, if not necessarily when put on the DEX or taken off the DEX. So I think there are, again, technological solutions emerging where, for example, if this asset is KYC'd, a token may be attached to that product to know, okay, well, this effectively ticks the box and you're not sort of operating opposite a nefarious actor.
Cool, thank you. We've got 2.5 minutes left, so in about 80 seconds each. What are your thoughts on what is needed? What can we do to get regulators, the traditional world, and even, being honest, the centralized parts of crypto, which are very centralized and very data heavy in some cases, to see that putting privacy first is 100% the best solution?
Yeah, people are building for this. I was reading about Zama when I got home last night, catching up on my newsletters. There's only going to be more automation, not less, as we go through the next few years. And the markets understand that, the regulators understand that. So it's for you guys to solve these problems. They can be addressed by engineering, and I think our role is to help you understand what they are and give you some guidance about what you're doing. But these are things that can be addressed. So having open conversations, don't ignore it. If you're accidentally laundering money, it's not going to do anything for your token price.
Brilliant. And Serge?
I think, I look forward to a world where sort of the crypto industry itself has a seat at the table and a voice with the regulator, rather than recycling old systems and trying to cater solutions for those systems that we know are oftentimes not fit for purpose. If we can almost come to it afresh and provide solutions that have not been thought of before, with the added impetus of new and more advanced technology, come and address some of the problems that I think we all agree that we don't want to facilitate proceeds of crime being laundered through crypto. It's not good for our industry, and it's not why we are here. To sort of find better ways to ensure that we are a effective barrier against that, but not to other adoption and other people coming into this sector that have been excluded from, for example, the banking sector or otherwise.
Mm-hmm. Brilliant. Thank you so much, everyone. Thank you for having us, and please thank Charlie and Serge.
Thank you again to the panel. We have one session left, but before we start that, some thoughts on what we've just heard. Firstly, I love that, well, I don't necessarily love it, but the thought there, whenever there's a system, people try to game it. That's an interesting thought. And of course, KYC, as we know, can be bypassed anyway. That's an interesting thought for anyone operating in this space. As we know, the current system is not without its faults, but blockchain can create trustless environments that help us start to solve some of the issues. What I thought was interesting about that panel was the realism of it. We weren't saying that blockchain is going to immediately fix everything, but instead we can begin to start fixing some of the flaws of the existing system. Tech's important, obviously, but another key point made by that panel, this is a cultural issue. It's really hard to get people into the right mindset for Web3 and for decentralization. If even lawyers are struggling with it, then many others will obviously struggle with it too. There's also only going to be more regulation. That is something that can be addressed, but something to be aware of. And I like the idea at the end from Saj that crypto can have a seat at the table and offer some positive solutions as well. And of course, I really like the idea that we can be more like the dog from the New Yorker from 1992. That's a lovely way of bringing this all to life. So we have one last session now, and it is a fireside from the Midnight Research Foundation. We're going to hear all about what's going on at midnight and what the next grand plans are. So this really is the way to bring these last 2 days together and look at what the future holds. This one is going to be with Agalos Kaias, Chief Scientist at Input Output, Elias Koutsoupias, Principal Research Fellow at the University of Oxford. Our moderator is Fergie Miller, Director of Research Partnerships for Input Output. Everyone, one last panel. Let's give them a big welcome to the stage.
Right, what they say about the lights is true. So thank you. I'd like to start off by saying thank you to everyone who's made the Midnight Summit possible. I'm sure you'll agree it's been a fantastic inaugural event and that Midnight has some very exciting times ahead. I'm Fergie Miller, Director of Research Partnerships at Input Output, and I'll be moderating the fireside on Midnight's research foundations and future directions. I'm delighted to be joined by two of my colleagues from Input Output Research, Professor Agalos Kayas and Elias Kousapias. Agalos is Chief Scientist at Input Output and Chair of Cybersecurity and Privacy at the University of Edinburgh, where he also directs the Blockchain Technology Laboratory, a leading architect of the Ouroboros Proof-of-Stake Protocol and recipient of the 2024 BCS Lovelace Medal. He's internationally recognized for advancing secure and scalable blockchain systems. Elias is a Senior Research Fellow at Input Output and Professor of Computer Science at the University of Oxford, a leading worldwide figure in algorithmic game theory and recipient of the 2012 Gödel Prize. His work at I/O focuses on incentive structures, reward sharing, and strategic behavior in blockchain protocols. So this summit marks a major achievement for Midnight, but from a research perspective, the Midnight journey started 6 to 8 years ago. Agalos, if I could come to you first. I know that IOR has published research across tokenomics, privacy-preserving transactions, and smart contracts, as well as a number of other papers, which has catalyzed the engineering that is being delivered in Midnight today. If you could think back to the beginning, could you tell us how Midnight came about, in your own words, and highlight perhaps the key research foundations that have informed Midnight?
Yeah, so this will take us back a number of years. It was about 8 years ago that we started this project on what we call proof-of-stake sidechains. So the question was, suppose you're given a highly decentralized proof-of-stake blockchain, and now you have another feature or another functionality that you would like to operate and have it being sprung up from this original chain. So you don't necessarily want to change the base chain, if you want to call it like this, but you would like to create a sidechain that is going to inherit security from the main chain, but it can bring completely different features and functionality to the main chain. So this work led to the research of what we call proof-of-stake sidechains and the concept of what we call at the time merged staking. We were thinking ahead when we were doing this work, trying to understand how Cardano, as we were looking ahead and thinking Cardano will become a highly decentralized system, how is it possible that Cardano can grow and create a rich ecosystem where its community can experiment with new functionalities and ideas. So we laid this out. I mean, needless to say, the concept of a bridge was fundamental to this work because these new chains, let's say, that are created by developers trying new features are bridged back to the main chain. And then via the concept of what we call merged staking, these new chains would still be secure, because one of the hardest problems of a blockchain is to create a resilient backend, a resilient infrastructure. And the key point here is that if you are in an ecosystem like this, you could have the operators of the main chain, of the base chain, lend their support and run additional software that can support these new chains and functionalities. So this was all laid out in this work, which was very well received at the time. Still, we were quite ahead of the curve. I mean, as we are now, this goes back, let's say the paper was completed in 2016. We had the publication in 2017. Now we're like, about 8 years later. So that was, if you want, the foundations over which now we can have a system, an amazing system like Midnight. So that was the first stop I want to make. And then the second one was something that will bring us closer to, okay, what is the proposition, right? What is something, an important feature that could be explored in this context? And this is about privacy-enhanced smart contracts. It was clear that privacy is one of the key barriers for wide adoption of this technology. So there's no way that you can encode, let's say, all critical business logic in a smart contract platform and have this to be completely in the clear. There should be the capability of the system to enable you to make some elements of that business logic confidential, right? So that was clearly missing in Ethereum, was clearly missing in Cardano as well. The thing is that it's very challenging. The problem is that these are decentralized systems, and one of the key issues that you get, especially if you think about smart contracts, is that it is hard to deal with concurrent transactions. So concurrency is a natural issue. I mean, you expect people to engage concurrently with smart contract logic. And if you just go out of the box and you apply a zero-knowledge proof, and you have parties independently try to create these zero-knowledge proofs to prove that the state of the system can be safely transitioned to the next step, then if two parties come and do it concurrently, then you'll find out that applying these two operations will clash with each other if you don't do it carefully. And then it will be impossible for the system to absorb these transactions that are produced concurrently by different parties. So that's a big barrier. Interestingly, it's worth pointing out that this does not come, this is not an issue when you have a payment system, and that's why you had privacy-enhanced payment systems. But doing it with smart contracts is much harder. So this led us to the work of Kachina, the privacy-enhanced smart contract that was eventually led to the architecture of Midnight. So this is the two works that, you know, basically, if you want, cover the consensus and cryptographic part. But another important topic is about incentives and the cost model of accessing a system like that. And this brings me to the topic of space tokenization, for which is work that, you know, we've worked together with Elias on that, and I think he would have a lot of things to say about it as well.
Sure, Elias, could I bring you in here? This is an area of your expertise.
Yeah, so our paper on tokenomics and ongoing research explores the question of predictability and responsiveness. Traditional blockchains like Bitcoin focus on responsiveness. If somebody is willing to pay enough, their transaction will will be processed quickly. Midnight takes an opposite, not exactly the opposite, but somewhat opposite direction. It cares about planning. You pay in advance so that you have predictable service in the future. You get a minimum future service, and you don't have to pay anything else. And Midnight does both things. It's a little bit responsive, and it's a little bit predictable. And the question is a great question: is whether these kind of mechanisms can achieve both worlds, can be good in both worlds, be predictable for those that plan ahead, and be responsive, have responsive service for those that are willing to pay immediately.
Great, thank you, Elias. And I know game theory permeates across all aspects of system design. What, in respect to Midnight, would you say are the key aspects of incentivization and strategic behavior that are unique to Midnight?
I'm not sure that I got your...
well, sort of, what sets Midnight apart from other protocols? Is it things like
for tokenization?
Yeah, from a game theory perspective, but also from a tokenization perspective,
okay.
Sort of things like robustness or sort of other aspects of design.
So how does game theory come into the picture? Let's take Midnight. Midnight has this novel mechanism of 2 tokens. Dust is, you pay transactions with dust. Dust is not tradable. You cannot sell it. And this creates a completely new environment and raises a lot of questions. So how users are going to react to that? And it's an open question we're going to see in the future. And from the game theory perspective, this is more, okay, let's say that this is more about beyond behavioral economics. It's not about human nature, because people explore, users explore, participants explore many strategies that we haven't considered in advance. It's not possible to consider all of them, and therefore the protocol must be robust. In other words, it must work as expected, even if the users, the participants, try unexpected strategies. And this requires a very good design, a simple, robust protocol that can withstand any kind of unusual user exploitation. And Midnight is a perfect ground to understand this kind of questions, to explore how a protocol can be robust, even if you cannot really predict the future, how it's going to behave in the future.
Great. And Aglos, I know I want to sort of ask you a bit about Minotaur. So that's a very other sort of notable area of research that we've done at Impact Output. Could you sort of talk about its relevancy to Midnight?
Yeah, so this fits well with what Elias was saying. So there are a number of features that the Midnight blockchain brings. I mean, the one we discussed already is the 2 tokens. So, by the way, from the tokenomics perspective, we had a breakthrough result that we published last year, but was presented at a conference, The Advances of Financial Technology this year, which basically demonstrated how 2-token proof-of-stake systems like Midnight give a much more agile and capable design space for tokenomics policies, what you might call monetary policy for blockchains. So these 2-token systems, they give you a lot more opportunity to do things and extract useful properties about how the tokens behave, how the prices of the tokens behave. So they are much richer platforms and fertile ground for mechanisms, as Elias was saying. So this is the 2-token feature that it's a very innovative direction that Midnight is taking. And the other innovative direction, which is also comes in some sort of multiplicity, is coming through the Midnight airdrop, which is a very large-scale cross-chain airdrop to different systems, which opens up the opportunity to think about a future of Midnight that could be a multi-resource consensus engine and platform. And just to appreciate a little bit about this multi-resource functionality, if you look at systems like Bitcoin, Ethereum, and Cardano, and so forth, these are all single resource systems. So basically, they base their consensus engine on a fundamental resource, be it computational power or stake, and their security is drawn from that. But the Minotaur work that you mentioned, work that we published inspired by the bigger Midnight vision 3 years ago, talks about how is it possible to create a consensus engine that draws its security from multiple resources. So the Minotaur paper was exploring one particular configuration of this, which basically was asking the question, can I take work and stake and create a compound resource? You can think of it as work stake, and then base the security of the protocol on that compound resource. And this is the question that it was open, let's say, to do it properly up to our work, and that was solved with the Minotaur paper. And of course, thinking about this and the techniques that we developed there now open up the direction for thinking of multi-resource in a context of multiple stake-based resources. So you can think of basically a platform that draws security from Bitcoin, Ethereum, Cardano, and different systems, pulling resources together and essentially breaking these somehow island barriers that you have when you look at these ecosystems today, right? So the future of what Midnight can be, with its emphasis of bridging of bridges, because it fundamentally begins with a bridge to the Cardano ecosystem, but thinking about the bridges that it can build via the airdrop, but with further bridges to these systems, for example, bridges back to Bitcoin, which is a very active area of research at Input-Output right now. It opens up opportunity from drawing resources from different systems and securing these platforms, securing blockchain platforms, and Midnight in particular, by many different resources that can be pulled together.
Sure. So you're beginning... Sorry, Elias, would you like to add to that?
I think the underlying issue here is mechanism design. And we heard a lot about privacy, rational privacy here. And rational privacy is about disclosing information. A traditional theory, a major theory in game theory, is mechanism design, which deals exactly with this issue of disclosing information. For example, in an auction, people have private information, how much they value an item, or multiple items. This is a multidimensional mechanism design, actually, that Angelus mentioned. And disclosing this information having this private information has an advantage. You can get better prices if you have private information, because in some sense, the auctioneer pays something to get this information out of you. That's an important aspect of how Midnight, that has a new layer of privacy, is going to be the ground of designing new mechanisms.
Great. Well, I know MEV is a sort of an active area of our research amongst a number of others. Agnes, you were starting to talk about the future, so maybe I could come back to you on that. And you know, one of the sort of aspects of research is it has this long arc nature, which at times can make it a more nuanced story to tell. Today is a very significant milestone for Midnight, but in one way we're very much at the beginning. Could you speak to a bit about what research directions you believe are required for Midnight to continue to lead in rational privacy in other areas, not just over the next few years, but over the next 5, 10 years, maybe decades?
Yeah. So looking ahead, there is one direction which is quite important from a safety perspective, and that's post-quantum security. Now, the fact is that a lot of the cryptographic techniques that are in play here, including in systems, Cardano, Ethereum, but Midnight as well as we speak today, they're not safe from an adversary that is equipped with a quantum adversary. So the question is, in which way we can draw from novel cryptographic techniques that can be resilient against quantum attacks. And the direction that we're moving is the direction of lattice-based cryptography that has the following important advantage from this perspective. So lattice-based cryptography not only is capable of withstanding quantum attacks, but also it unlocks additional cryptographic capabilities that are impossible, as far as we know, with the more classical cryptography that is used in these systems. And just to highlight how important this is from the perspective of Midnight, using lattice-based encryption mechanisms, it is possible to have private state created by different sources interact meaningfully with each other. So these are the same techniques that have been used in the context of fully homomorphic encryption, where basically it's exactly what's happening, right? So these are like encrypted information coming from different sources, but then it is possible to compute functions on top of that encrypted data and calculate the outcome. So this opens up a lot of opportunity in the context of Midnight, because we want to be moving to a setting of smart contracts that enable users to interact with each other's private state in a complex fashion. And what we would like, ideally, is to be able to run any type of business logic in a platform like Midnight that is privacy enhanced. And this goes back to the point that Elias was making, that Midnight, in this way, should be transitioning to a safe platform where absolutely any mechanism could be developed as an application on top of the platform. And of course, maybe speaking about mechanisms, of course, it's one feature to think about people being able to design mechanisms, but they have to be also get the incentives right. And I think, like, for this reason, not only cryptography is very important to get right, but also understand the game theory aspect.
Yes, that's game theory permeates all these systems, and it's a great research area to understand many of things. For example, pooling, who have traditional blockchains like Bitcoin or Ethereum or Cardano, they have pools. Some of them are on-chain, some of them are formed off-chain. This creates incentives, unpredictable incentives. We wouldn't probably predict this in advance. So game theory tries to understand what is going on, what will happen when we design systems. We just design protocols, and at the end, you have a game theoretic issue. Understanding it is a great question, and Midnight raises many, many interesting long-term research questions.
Great. So we've got about just over a minute left. Any sort of concluding remarks on the research side?
Well, I mean, the thing I can say is that it's incredible to be here. It's incredible to be here with all of you people that are interested in this technology. I have to say, looking back, when I was a PhD student and we were, writing in a blackboard some of these zero-knowledge protocols or multi-party protocols, it would have been in my wildest dreams that I would have imagined that this type of technology can reach out and make such an impact, and hopefully much more in the future with the help of all of the people that are here and in other blockchain communities, bringing this technology to the world to solve real problems. So this is why I think it's an amazingly exciting moment right now, and I would definitely be looking forward to more of that.
Elias? Okay.
I second that.
Great. Well, thank you for your time, Aggelos and Elias, and thank you for those insightful thoughts. I hope we've all come away a bit wiser after the session. We'll be around after Fahmi's closing session, so please come and find Input-Output Research over lunch to discuss how our scientific research can support you create the future in privacy. So thank you. Enjoy the rest of your day.
Thank you. Fascinating stuff there. Couple of points I took from that. I mean, one is how we're going beyond behavioral economics Really, obviously, big picture thinking with some very intelligent people on stage just there. I found the note on protocols being robust, even if people trying to use unexpected strategies to find their ways into doing things. All very intelligent stuff. Also, to speak to Midnight specifically, the fact that 2 tokens and tokenomics that we have here with Midnight can give people a more agile space for blockchain monetary policy, that itself is a really, really deep thought and something to get into. Looking to the future, of course, post-quantum security, something we keep hearing all about. And of course, we're not yet there in terms of protecting and safeguarding against it. That is an area and a development we're going to have to watch very, very closely. But also very interesting to see that hope provided by lattice-based cryptography, which could, of course, be a solution. Also, one thing I loved at the end there was seeing that Agalos and Elias's vision has come to life, and they're now working on genuine use cases for zero knowledge. So, of course, we now move on to some closing thoughts. And once again, I'm really excited to bring Fahmi Syed back to the stage. Now, this has been a great 2 days. I think we've really all learned a lot. We've seen some exciting movements in how this ecosystem is building and working together. And I certainly have really enjoyed it and feel very positive as I'm about to leave this event. So everyone, please, I want to have one last big welcome to the stage for the president of the Midnight Foundation. Let's make this a good one. Everyone, Fahmi Syed.
Hello, everyone. Welcome to day 2. Well, we're finishing day 2. So we thought we'd finish with some closing thoughts. Hopefully, you've had a wonderful 2 days. Hopefully, you listened to many of the panelists over the last 2 days, some thought-provoking pieces. And I've realized one error of today, and this is the real, I forgot my clicker, so I can't move the slides. So there you go. Look, real time. Here you go. Forget that even happened. It's private, only in Midnight. So anyway, so we're going to talk about some of the things that we've seen over the last few days. So first of all, I want to thank you, each and every one of you, for coming. I know some of you have flown far and wide from across many continents. And joining this conversation about privacy. I think what we've realized is how important privacy is to everything we do, how we live our lives, both our physical world, our digital world. Some very interesting conversations yesterday, philosophically, around what privacy means. And then today, in terms of some of our partners showcasing what it is to build privacy applications, to use programmable privacy within the Midnight stack. So some of the names are up here. So I want to thank everyone for coming up on stage speaking. It's not the easiest thing to do. So for sharing their thoughts, sharing what they're developing. Apologies, I wasn't always around today to watch you speak, but I know many of you, and I know you're doing wonderful things, and we're proud to call you partners and part of the Midnight sort of ecosystem. So what else is left? So I want to talk about the Midnight Hackathon. Some of you would have seen that's happening downstairs at the back. That is continuing until tomorrow. So if you're still around tomorrow, please come, join in, celebrate their achievements, listen to what they've been working on, and we'll announce the winner. So tune in, and we'll hopefully have some great products to speak of. But beyond the hackathon, where we're bringing developers together, I want to introduce the Alit. And I probably mispronounced that, so apologies. They are our inaugural class of Midnight ambassadors, our technical ambassadors. And they've taken part in the Zeely Quest to prove their technical capabilities, to prove their love for Midnight. So I don't know if we have any members of the elite crew here today. If you're here, please stand up. Oh, there we have. Okay. Please keep standing, so you're even more embarrassed than you have already been. As you can see from the map above, They've come from all over the world, and their passion for what Midnight is and what privacy is stands out. And elite comes from, it's a play on the word elite, but it comes from, for any Star Wars buffs, from the Mandalorian. And the meaning is family or clan. And that's what we're trying to do at Midnight, is to bring us together as a family, as a clan, as a network, as a movement. So to become a member of the elite, you have to showcase your technical capabilities using the Z Elite Quest. You don't have to have a jetpack, don't worry, it's simpler than that. So if you want to find out more, come to the Midnight website, it'll explain more. If you want to find out real time, then speak to any of the members who are standing up, who will gladly tell you about what they're building, what they're doing, what it means to be a member of Elite. And if you can't find them, find Lauren. Lauren, where are you? Are you here? Yes. There she is at the back. Lauren is our head of DevRel. She loves every single member of our family of Elite, and she will help nurture that family and help it grow. And I have absolute faith in what she's doing and absolute faith in what everybody else is doing. So thank you very much. Please take a seat. Thank you. Beyond Elite, many of you have come here today or the last few days to learn more about Midnight and privacy. So we're asking each and every one of you, if you believe in this, believe in what we're trying to do, or want to be part of it, please sign up to the Midnight Ambassador Program. You don't need to be technical. You can be. You can just be a believer in what privacy means and why you want to highlight and build upon that. So, to go back to some of the things we've spoken about, at Midnight, we think together we can unlock blockchain's true potential and create that fairer future for each and every one of us, to empower each and every one with that freedom of choice and to build something for yourselves, for your communities, and for wider. And it's based on the principles of ACE. So I'm just going to repeat that from yesterday. It's that freedom of association without permission. It's the freedom of commerce without restriction. And it's the freedom of expression without censorship. And it's a very strong statement. We believe in it. Very simple to remember. Hopefully you'll all take it forward. And I just want to finish with a few final words, that privacy isn't just a feature. It's a foundation. It's a foundation to build upon. It's a start. It engenders trust and openness from which you can launch yourself, launch your features, launch your products, and beyond. Privacy is a human right. It's your right. And you should claim it. You should own it. I have been overwhelmed by the passion I've seen, the buzz around the place, how everybody's come together, how we've been able to unite together from different ecosystems, not just Cardano. I've been speaking to people from Solana, Avalanche, and beyond. We're about to conclude one of the largest distributions, airdrops, in the next couple of days as Scavenger Mine comes to a conclusion, so please take part. And genuinely, from myself, from the foundation, from the people at Shielded and beyond, we want to thank you. So thank you for coming. Thank you for being part of this. And please, keep building on Midnight. Thank you.
Thank you. Brilliant way to finish. Thank you, Fahmi. Look, it's now time for a final goodbye, sadly, at least from me. I know there's more stuff going on in the afternoon. For those joining the afternoon workshops, please return here straight after lunch. That's my housekeeping bit. Also, don't forget to scan the QR code. It's not on the screen just yet, but I think we'll be showing it. There we go. Now we have it on the screen. Share your thoughts. Let us know what you thought of this. Let us improve for the next time. I think it's been an amazing couple of days, and it'll only get better with your input and your contributions. Now, look, 2 days ago, we arrived as individuals. We leave as a network. Midnight is no longer an idea, it's a reality that's being built together. And it's been a pleasure emceeing this event. I've had a really great time. Thank you to everyone involved. Thank you, of course, to our speakers. Thank you for everyone who's made the effort to join us here in Greenwich. And thank you, of course, to everyone watching on the live stream. Congratulations as a final point to the Midnight team. I think we can all agree it's been a great event, hasn't it? Can we get a round of applause for the Midnight team? And my last introduction for this show is the lunch, which is being served through there in the visitor hall. I've been Ian Horn. It's been a pleasure doing this. Thank you, everyone. Thank you.